time of year carries memories, like a never fading whisper in the breeze. Oh, we will keep on changing all over again. Yeah, we will keep on changing, just like another season. Don't want another day without you by my side. Oh, this season. You came into my life just like another season. Not for long, just a time. Just like another season. Just like another season. Just like another season. The seasons come and go like thoughts of you, like a wave returns to the sea into the blue. They change but in a cycle that I can't lose, each painful but delightful to live through. You came into my life just like another season. Not for long, just a time. Just like another season. Maybe this time next year you'll reappear for no reason, but I'll cherish every day until you come my way this season. The seasons turn and change just like your mind, like the sun gives into the moon, into the night. Time continues marching, it slowly crawls. With each new one starting, I recall. You came into my life just like another season. Not for long, just a time. Just like another season. Maybe this time next year you'll reappear for no reason, but I'll cherish every day until you come my way this season. Each time of year carries memories, like a never fading whisper in the breeze. Oh, we will keep on changing all over again. Yeah, we will keep on changing, just like another season. Don't want another day without you by my side. Oh, this season. The seasons come and go like thoughts of you. Like a wave returns to the sea, into the blue. They change but in a cycle that I can't lose. Each painful but delightful to live through. You came into my life just like another season. Not for long, just a time, just like another season. Maybe this time next year you'll reappear fire.
Some encouraging data this week.
恋爱的滋味 ，SV and criminals want that information.
Well,
Let's talk about the goods part of that and the services. When you think about, Carol, the
Yeah.
big retail earnings that we're going to be getting, the over inventory from the double ordering, the discounting and the disinflationary, if not deflationary effects that come from that, that's for me top of mind.
Well, and top of mind for me is more Fed speak in terms of how they manage us. And do they start to kind of manage us upward in terms of
And
maybe
do we
inflation?
hear from Jerome Powell himself?
I don't know.
I don't know.
Is he on a beach like Tim
Can we
Stenovec?
hear from
hope
Gus
so.
Gus?
Barker was incredibly hawkish earlier today.
Yeah, exactly. So I am waiting for them to kind of manage us a little bit upward when it comes to maybe what inflation is longer term, maybe in a normal, semi-normal environment. All right, guys, I don't know about you, but I'm exhausted. It's been quite a week. We got lots more to come certainly next week, but that is a wrap for the Friday edition of Beyond the Bell, our simulcast coverage on radio, on TV, on YouTube. We will see you again, same time, same place, come Monday.
This is Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovec on Bloomberg Radio.
I was looking for my notes because I think what did Doug Luthold called it? Like a counter-cyclical bear market rally. Here it is.
It sounds
Counter-trend rally within a cyclical bear market. It's a lot of
I
words.
need to say that a few times and think about it because that is a lot of words.
Counter-trend rally within a cyclical bear market. So he's still saying bear market.
Things are still bad for sure. Things are good now, but then they'll be bad again.
Yeah, inflation is still high.
Yeah,
It's
yeah.
still high. And we'll have to keep an eye on certainly the labor market because it is still strong. But if that starts to come down and if consumer balance sheets are going to get stretched, that's going to be certainly tricky in a consumer spending-led economy. All right, folks, Katie Greifeld, Carol Masser, you're listening, watching Bloomberg Business Week right now. Back to World and National News and Nancy Lyons in D.C. Hey, Nancy.
Thanks, Carol. A search warrant and a list of documents retrieved from former President Trump's Florida home have both been released. Bloomberg has seen them and reports the FBI seized 11 sets of classified documents in about 20 boxes. Some of the records were marked top secret. Prosecutors identified 3 federal criminal laws under investigation, including one that falls under the Espionage Act. House Democrats are expected to take a vote this afternoon on the revamped Build Back Better bill that's now called the Inflation Reduction Act. And Bloomberg Washington correspondent Joe Matthew says it is likely to pass.
Speaker Pelosi cannot afford many defections here, but remember, they already passed Build Back Better in the House, and she only lost 1 Democrat vote when that happened, so we have a pretty good sense of how this is going to end.
Bloomberg's Joe Matthew. Republicans say this bill will only lead to higher inflation. The leaders of the world's 2 biggest economies could be firming up their plans for their first official in-person meeting. Bloomberg's Nathan Hager has more.
President Biden could meet face-to-face with Chinese President Xi Jinping this November. According to the Wall Street Journal, Chinese officials are making plans for President Xi to visit Southeast Asia that month and meet the U.S. president there. It would be the Chinese leader's first international trip in nearly 3 years. It's a sign that President Xi is confident about his prospects as he's expected to claim an unprecedented third term at a twice-a-decade Chinese Communist Party conference later this fall. In Washington, I'm Nathan Hager, Bloomberg Radio.
Global news 24 hours a day, on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries.
Nancy Lyons, thank you so much. Nancy Lyons with World and National News in the nation's capital. All right, folks, we're going to get back to some of the news out of D.C. and that judge ordering the release of the Trump Mar-a-Lago search warrant and what we're finding out about that search warrant specifically in just a moment. In the meantime, a lot of big macro stories going on, and that includes with climate change and the impact on our global environment. And this story, I've been kind of obsessed with it all week, the Rhine.
The Rhine River, of course, it fell to a new low on Friday. It fell below 40 centimeters. That is 16 inches on Friday, probably going to dwindle further over the coming days. That's according to German government data. And at that depth, it's not economical for a lot of barges to actually transit through that choke point.
I mean, this is what I have to say. When I went to Panama and I saw the Panama Canal, it was just so eye-opening for me to see these massive ships. And this is a key point for moving things east-west, right? And so you just get an idea of these, crucial points when it comes to trade and moving things around the world, globalization. And in Europe, this is an incredible passageway, an important passageway, whether it's energy or other ag commodities. And, you see some of these pictures if you go to Bloomberg.com or check it out on the Bloomberg terminal, and you realize there's so much land being exposed because the water has gone down so much.
Yeah, absolutely. Think about the Rhine. It's used to ship everything from fuels to chemicals, paper products to grains. Of course, this couldn't be happening at a worse time because Europe, of course, it's already in the grips of an energy supply crunch that's been worsened by Russia's war in Ukraine. So it's really, we're finding out what happens when you layer a climate crisis on top of an already underway energy crisis.
Right. It's being hit on multiple levels. In the meantime, a related story, England officially in a drought across across vast swaths of the country, the government's environment agency announced as another heat wave intensifies and water companies impose restrictions of household use. This story also on the Bloomberg today. So again, we're seeing severe weather temperatures, certainly over in Europe and in the UK specifically, and the impact of such. This is Bloomberg Radio.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 4 winning weeks in a row for the S&P 500 index. And on Friday, stocks closing at or near session highs. Right to the numbers. Big day for the S&P, up 72 points, rallying 1.7%. The Dow up 1.3% today. The Dow Jones Industrial Average up 424 points, whereas the NASDAQ Composite Index outperformed, up 2.1% today, up 267 points. NASDAQ 100 Index up 2.1%. Russell 2000 today also up by 2.1%. 10-year yield 2.83%. The 2-year yield 3.24%, whereas gold today up $10 the ounce to $1,800 even, up by 0.6%, and West Texas Intermediate crude down 2.6%, 91.87 a barrel. Bitcoin down 0.3%, 24,147. Bottom line here, stocks finished the week on solid footing. Traders assessing whether an inflation slowdown could soon make the Federal Reserve reduce the pace of its most aggressive tightening campaign in decades and prevent a hard landing. Recapping, S&P up today, rallying 72 points, closing at session highs up 1.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Carol Master, along with Katie Greifeld in our Interactive Broker studio. And we have, of course, been talking about what is among the most read stories. In fact, it is the most read story in the Bloomberg in the past 60 minutes. The FBI seizing classified records, some are top secret, from former President Donald Trump's Mar-a-Lago home. This is according to court documents unsealed Friday. We are talking about that warrant that led to that FBI search on Monday. June Grosso is Bloomberg News legal analyst and host of Bloomberg Law right here on Bloomberg Radio. She joins us on the phone from our New York City bureau. I know it's a busy day, June. You've had a chance to look over, I'm assuming, the warrant. What do we need to know?
Well, I think what's astonishing, first of all, is when you look at the receipt for the property, and you mentioned there are 11 sets of classified documents, and you just see the way they label it. So miscellaneous secret documents, miscellaneous top secret documents, miscellaneous confidential documents, and then various classified TS, top secret, and SCI documents. That refers to sensitive compartmented information. It's a government labeling for material gathered through sensitive intelligence sources, methods, or analytical processes. So what you see is why the Justice Department was so anxious to get this information back, and why they, after trying subpoenas and negotiations, they decided to go for the search warrant. I mean, it's obvious that this is information that shouldn't be stored in even a locked room in Mar-a-Lago.
And June, Where are we in the timeline of how this could unfold? What happens next?
What happens next? I really don't know what's going to happen next. I mean, Donald Trump said that he gave permission, basically. He didn't object to this. And so now I assume that the Justice Department is going to go on with its search, its investigation into Donald Trump, and is going to look through this information here. Now, there are three, when they list what possible crimes could be, or statutes this could be in violation of, or it says the Espionage Act is one of them, which is quite serious, as well as obstruction and removing of government documents. So when you're talking about the Espionage Act, this isn't just about the Presidential Records Act. It's about far more than that, and it's about obstruction and possibly destroying, altering, or concealing documents. So, I mean, I think you can tell here just how important this search was.
So, June, help me out, because today the former president also issued a statement saying that the information was declassified, right? Presidents have the option to do that. How do we think about that and factor that in as well?
Well, presidents have the option to do that, but it's a very, very specific process for doing that. And one wonders if the Trump White House would ever have gone through that specific process. Every piece of paper has to be noted, and there have to be records of it. I mean, it's not just waving a magic wand and saying, I am President Trump and I declassify these documents. That's not what happened. And even if he did, I mean, he still has these records that he shouldn't have. And these, I mean, there's no way that this, I mean, I know that he said that, and I know that's going to be the defense. It's unclassified, but I can't imagine that he went through the process, because if he had done that, we'd have some evidence of that beforehand, and certainly the Justice Department would know that. You can't just say you declassified them. And by the way, when he stopped being president, he lost any ability to declassify any documents. So unless he did it while he was in the White House and then but still the question is, why did he take these with him? I don't understand why he took the 15 boxes that the National Archives retrieved, and I certainly don't understand why he was fighting with the Justice Department to keep these documents. I mean, that's the big question. So, why did he fight to keep these documents?
June, as you know, our world so much intersects the business world, the financial markets world. It's kind of funny to be sitting here on a Friday. We had a rally on Wall Street for the week overall. We saw buying into the close with the equity averages closing at their best levels of the day. And then we had all this news coming out of Washington, and we've been waiting for the unsealing, of this search warrant. What is it that jumps out for you? And I think about the Bloomberg audience, what maybe they need to think about as more of this information comes out. I guess I would say, like, why does our audience care about this, or should they care?
Well, it's a former president of the United States who's being investigated for espionage. I think that everyone in any walk of life would be interested in that and would be concerned about that. I mean, you have a former president who has defied, according to what we know, has defied the law, is keeping classified documents at a residence where a lot of foreign people come to, and where there was even a case where there was an attempt by Chinese spies, I believe. So, I mean, it's very serious, and I think anyone would be interested and concerned about what's going on here. I mean, we don't know. It could be there's a reason for this. I assume that there is a defense to this, and maybe he possibly won't be charged. There's no indication that he's definitely going to be charged for this, but it's very serious just to have had these. And also, it was sort of like we are seeing this because the Attorney General called his bluff. The Attorney General said, "Okay, you're making all this fuss. Let's show America what we have here." And I think that America's going to sit up and take notice no matter what area of life you're in.
And appreciate that, because I do know yesterday we talked a little bit with you about how ultimately this investigation could lead to ultimately no criminal prosecution or any criminal wrongdoing by the president. So just want to put that out there as well. June, thank you so much. June Grosso, she's Bloomberg News legal analyst and host of Bloomberg Law on Bloomberg Radio at 10 p.m. Wall Street time on radio. All right, in the meantime, a lot going on, a lot of news out of Washington, and that includes continuing news and expectations of passage of massive legislation for the Biden administration that deals with taxes, healthcare, and the clean energy world. And so we want to get into that with our next guest. Greg Webstone is CEO of ACOR, the American Council on Renewable Energy, a lobbyist based in Washington, D.C., a national nonprofit working to accelerate the transition to a renewable energy economy. Members of ACOR include everybody from AWS, B of A, Chevron, Google, Goldman, SunPower, Investis. And Greg joins us, Katie and myself, on the phone from Washington, D.C. Greg, nice to have you here on Bloomberg Business Week on Bloomberg Radio. There's a lot going on. And I want to just start, if we may, with politics and political wins. How do you think about everything that is going on, a potential second run, another run by former President Donald Trump, but we have a lot of investigations. We have midterms coming up. How do you think about this and how it impacts the renewable energy space?
Yeah, there's a lot of big things going on. Thanks,
yes.
By the way, for having me. I mean, in terms of scale, this is a hugely important step. It represents really the first serious response to the climate problem from the United States Congress. We've had a number of states that have done really good things. 21 states have 100% clean energy goals, but the federal government has not stepped up, and we know that needs to happen. This bill is really important. I think it's going to resonate with the American public. We don't deal in my organization with drug price issues, but those are important issues too, to be clear. But what we're looking at here is a package of incentives that turns on its head the current bias in the tax code toward fossil fuels. Right now, the incentives for renewable energy are phasing out of the tax code, while incentives for fossil fuels are permanent and have been on the books for over a century. And what this bill does is, for the first time, create long-term incentives that businesses can rely on to invest in not just renewable sources like wind and solar power, but really important grid technologies like like battery storage, and new technologies like hydrogen. So these are provisions we've been advocating for years, and we see this bill as a critical step forward. And analysts conclude that it will get us on the path toward our climate targets. They are projecting major reductions in greenhouse emissions as a result of the provisions in this bill.
Well, Greg, let's continue that metaphor. This bill putting us on the path towards some of those targets. What, though, is needed to get us finally to the destination? Is this bill enough?
Probably not, is my sense. And, there's a lot of variables that we can't be sure of that go into how much progress we're going to make. What are going to be the prices of natural gas and fossil fuels? How is the technology going to move forward? Among the things that we know we need to do beyond this bill, we've got to make big investments in our transmission infrastructure, which are antiquated, leading to unreliable grid in big parts of the country. And we know we need to make those investments really for reliable power. It will get us more cost-effective power. Believe it or not, renewables are cheaper than any other source of power in most of the country, but we've got to have the transmission infrastructure to access those renewable resources. So that's part of the picture. And there is a question, can we get there, all the way there, with just incentives? That's what this bill is. We're very lucky that the economics of renewables have improved to the point that incentives alone can get us a lot of the way there, and that's what we're looking at. But whether we can really close the gap entirely is unclear. So we may need to come back and do some additional things. The Biden administration has additional authorities that they can use, and I'm hoping they will, to continue to move us forward, even above and beyond everything in this bill.
Greg, we're talking with Greg Webstone, President and CEO of the American Council on Renewable Energy, lobbyist, and really representing the move towards renewable energy. Your companies are just like a who's who of corporate America, whether it's a Microsoft, a Chevron, a SunPower, a Goldman Sachs, a lot of financial companies. How can the private sector move this even more quickly? Because I know in the investment space, if there's money to be made, it will go there. So I'm curious, when you say that the financial dynamics are there, the cost equation when it comes to renewables, it makes sense now. Why aren't we moving faster then? Is it the old guard that's holding us back?
Well, we are moving pretty fast. I mean, we've been seeing investments to the tune of $50 billion a year in renewables, and wind technician jobs, solar installer jobs are the two fastest growing job categories in the country. The private sector has been a big part of that growth. We have seen all the big tech companies, a lot of companies investing and going out and buying their own electric power and contracting for renewable power so that they can be sure they can run their company without contributing to the climate problem. That's really important, particularly for the tech companies with big data centers, but we see it more broadly as well. And those companies, they're also saving money because renewable power has proven to be more cost effective, and it's predictable. You're not subject to the volatile prices that you have if you rely on global oil and gas markets where, autocrats who don't really have our best interest at heart, obviously, can have a big impact on prices. And that's what's happened in natural gas, even as renewable prices have remained steady.
And Greg, you made the point that there's a question as to whether incentives will be enough, whether they'll go far enough. And I'm curious whether that implies that, you think at a certain point penalties should be introduced.
Well, we've dealt with other environmental problems with directives and regulatory requirements. We phased out ozone-depleting chemicals in that work. We set up a structure in the Clean Air Act that successfully controlled the acid rain problem. We reduced emissions in our cities through tailpipe standards. There's a long list of very effective controls that have mattered the quality of life in this country, and we may need eventually regulatory initiatives like that to make sure that greenhouse emissions that are causing the global warming problem really are reduced.
Can I jump in? Especially, ESG is going through a reckoning. It feels like people want more transparency about really where their money's going. Is it time to penalize companies that impact the climate? Just hardcore. If you're not taking carbon, is it just time to do that so that we can move the needle even much more faster?
Well, economists really like that approach because it's inherently very efficient. There were proposals to do that fell by the wayside in the negotiations here. So this still doesn't have everything we would have liked to get done now. But I really do want to emphasize it is something to celebrate because this came out of the ashes. It did not look like we were going to see anything here. And these are programs that we think really will help, really will spur accelerated growth in an industry that's already booming. But your question's a good one. So we may need to come back to some kind of emission C or other approach that gets us the rest of the way there.
And Greg, of course, your organization represents companies that use and produce renewable energy. That list includes Amazon, Bank of America, BlackRock, Lockheed Martin, Meta, Microsoft, just to name a few, really a wide range there. I'm curious, assuming this bill becomes law, is signed, what companies, to get specific, would be sort of most affected here?
Well, you have companies that are developing renewable power, companies that are manufacturing, wind turbines and solar panels, companies that are buying this power and using it to power data centers. All those companies are going to benefit. So I think we're going to see substantial growth, substantial new investment. I mentioned that we're running at about $50 billion a year in renewable energy and what we call enabling technologies like energy storage. Those numbers need to get up closer to $90 billion a year, in our view, to really get us on the climate path. And I think we're going to see movement toward that range.
Hey, Greg, one thing I'm curious, this legislation, assuming it passes the House and it gets signed by President Biden, how does it change the timeline for us becoming more carbon neutral, if you will, or, actually not producing carbon emissions?
Well, it really moves it up. I mean, the Biden administration has ambitious goals, and this puts us in the game. So
does it move us more towards being carbon negative instead rather than carbon neutral?
Well, what we're trying to do is rely on a grid that does not produce electricity, sort of electrify the economy. So there are electric vehicle provisions there to get electric transportation, electrify home heating and cooling, and then create a power grid that does not emit greenhouse emissions at all. And by the way, it won't emit conventional pollutants either, so our cities will be cleaner. And that's really the goal. That's what we're trying to get to. The Biden administration wants to be there carbon-free by 2035, and we see this as a really critical move in the right direction. So we're hopeful this will get us along the way, maybe to a 50% reduction in greenhouse emissions from the power sector. Certainly that's the near-term objective we're looking at. And that puts us on a path. We have got to reduce these emissions and get started quickly. So it's really getting started, get something we can build on, and then we can come back. And I will say corporate America, for the most part, is very much down for these investments, and they recognize the importance of making progress here and that the economics of renewable power work. So I think we're going to see a lot of investment and growth as a result of this bill.
All right, we're going to leave it there. Hey, Greg, thank you so much. Greg Webstone, President and Chief Executive Officer of the American Council on Renewable Energy, ACORE, joining us on the phone from Washington, D.C., addressing really the climate portion of the Inflation Reduction Act, which the House is expected to vote on and expecting to send it then to President Biden for his signature. But it is massive legislation, almost $440 billion. It's taxes, it's healthcare, it's initiatives for the climate industry. And as you heard from Greg, he represents a wide swath of companies feeling like this is a major step forward.
Absolutely. And the market reaction, too, this week, really robust. You highlighted that Invesco ETF, ticker TAN, which tracks some of these clean energy stocks, really having a great week.
Yeah, and it's a group that really gets, I feel like, batted around, right, depending on the news flow, especially when it comes to policy initiatives. So certainly benefiting as a result of the news out of D.C. All right, you are listening to Bloomberg Business Week. Carol Master, Katie Greifeld. Back to Nancy Lyons, who is in our D.C. newsroom. Hey, Nance.
Thanks, Carol. The search warrant of former President Trump's Florida home has been released. Bloomberg has seen it. It lists a variety of documents that were found that were listed as top secret and sensitive. And Bloomberg's deputy managing editor for U.S. Government and Economy, Wendy Benjaminson, says there was also information on what they were investigating.
They did cite that they were searching for evidence of violations of a section of the Espionage Act, which is a felony, and laws against hiding, damaging, or destroying government records and falsifying government records. So that's what they were looking for. We don't know yet whether they got the goods they were looking for.
Bloomberg's Wendy Benjaminson, Trump spokesman, says the records were ordinary or declassified. Another piece of landmark legislation is expected to pass in the House this afternoon. The $437 billion Inflation Reduction Act addresses climate change and lowers drug prices for seniors. Congressman Jim McGovern and Michael Burgess are on opposite sides in this fight.
This is a great day for America. I am proud to be here. It's not very often we get to pass bills that are going to change the course of history for generations to come.
It's going to make it harder and more expensive to heat homes, to buy groceries, to farm the land.
The bill being voted on this afternoon is far smaller than the $10 trillion measure originally proposed. Actress Anne Heche has died a week after being critically injured in a car crash. Global news 24 hours a day on air and on Bloomberg Quick Take.
All right, Nancy Lyons, thank you so much. Nancy Lyons in our 99.1 newsroom in Washington, D.C. Carol Masterlow, Katie Greifeld, Tim Stenovic is off this week, and we've been wrapping up the weekend, wrapping up the trading day. A lot going on. Two of our most read stories on the Bloomberg. I'm just checking this out. In fact, the top two have to do with this warrant that has been revealed. This was the warrant that led to the FBI search of Mar-a-Lago, former President Donald Trump's home in Florida. The FBI seizing classified records. Some are top secret. This is according to court documents unsealed today. Nancy Lyons talking a little bit about this. But we're getting more information, if you will, on maybe what was being looked at, and then obviously why it was being looked at and why the search happened.
And we know that the Department of Justice cited the Espionage Act in executing this warrant. And in terms of what was actually recovered, we know that investigators removed 11 sets of classified documents, included in about 20 boxes. Again, there was the executive clemency grant for Roger Stone in there. You had photos, you had information about the, quote, president of France. So interesting to see sort of this drip of information come out over this afternoon.
Yeah, and a lot on the legal front facing the former president. This is not the only potential criminal probe that has circled the president. He faces 4 others. So there's a lot going on that front. No doubt about it. The weekend talk shows on the networks will be all about about this news. In the meantime, we're waiting for the House vote on this massive economic package from President Biden and the Biden administration. And we know it has tax issues in it. It has certainly healthcare and, of course, climate change, which we just talked about it. But it is expected to pass the House and then go on for signature from President Biden.
Real Friday news dump. Political news. We haven't gotten that in a while. I was expecting some more company layoffs, maybe. It feels like we've gotten a lot of those on Fridays.
Well, we did get a little bit from Peloton, right?
That's true.
A little
That's
bit.
true, yeah.
But you're right. Like a big news dump. And in the meantime, we did see the equity markets close at their highs in the Friday trade. You are listening and watching Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet. On to the weekend after 4 winning weeks for the S&P 500 index. Stocks ended the week on solid footing as traders assess whether an inflation slowdown could soon make the Fed reduce the pace of its most aggressive tightening campaign in decades and prevent a hard landing. S&P today up by 72 points, a gain of 1.7%. The Dow was up 424, up 1.3%. NASDAQ, the outperformer today, up 267 points. That was a gain of 2.1%. NASDAQ 100 index also up 2.1%. Russell 2000 up 2 by 2.1%. 10-year yield 2.84%. 2-year yield 3.24%. Spot gold up $11 the ounce to $1,800.68, up 0.6%. West Texas Intermediate crude today down 2.6%, 91.84 a barrel. A stressful day at the San Francisco-based meditation app Calm. It's cutting costs by laying off 20% of its staff, or about 80 workers. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Charlie Pellet with that Bloomberg Business News Flash. Well, the next company we're going to talk about was founded in 1978, headquartered in Toledo, Ohio. We're talking about Marco's Pizza. It now has over 1,000 stores in 34 states, locations in Puerto Rico and the Bahamas. The company recently notes that it officially crossed the $1 billion mark in annual sales. So let's get more on the business, the growth, what's next. Let's bring in Tony Labardi. He is president and co-CEO of Marco's Pizza. He joins us on the phone from Florida. Excuse me. Tony, how are you?
Good afternoon, Carol. How are you?
I'm doing well. Tell me a little bit about the business and this achievement of $1 billion in annual sales. Why is this so significant for your story and your story going forward?
Well, really, the Marco's brand is doing incredibly well during some very difficult times. The last 2.5 years, as you know, has been challenging. But we continue to grow. We continue to see same-store sales growth, unit growth, average unit volume growth year after year, and we're pretty excited about it. And really, by crossing the $1 billion threshold, we're really now concentrating on what more can we do and be as a brand in our community. So we're establishing our new Marco's Foundation, which is really a charity foundation for our franchisees and team members to really be a positive difference in our communities, focusing on things like school and education, hunger prevention and nutrition.
All right, slow down for a second. So I want to go You've got a lot going on. I want to go back to the growth in the business. Sure. What is it? Is it just because if I think about fast food, fast casual, there's a lot of choices out there.
Be as a brand in our community. So we're establishing our new Marcos Foundation, which is really a charity foundation for our franchisees and team members to really be a positive difference in our communities, focusing on things like school and education, hunger prevention and nutrition.
All right, wait, slow down for a second. So I want to go. You've got a lot going on. I want to go back to the growth in the business. Sure. What is it? Is it just because if I think about fast food, fast casual, there's a lot of choices out there, and they're not all alike. I feel like the pizza sector, in addition to your local pizza places in various towns and cities, we certainly have a lot in the city. There are some really well-known chains that and newer ones entering. So why do you think you're growing? Is it price point? Is it your demographic? What is it?
Well, I think it's all of that. We've had an opportunity just recently to become the 5th largest pizza chain. Congratulations to our franchisees. We've seen about a 36% sales growth in the last 2.5 years. And really, it started with our national advertising. We became a national brand on TV. This year, as an example, we're on TV for 32 weeks. We really focused on our digital footprint by rolling out a new app and working on our web page. And we were able to take our digital orders from 25% just 3 years ago to now 65% today. And, of course, we've got a great product, and we're really the brand that very few people knew about. But as we continue to tell our story, and we're out there with a great value proposition, getting people to try our pizza, we seem to be winning the fight.
And let's talk about delivery a little bit more. I see in the notes that you passed over that you've made big bets on the future with third-party delivery platforms. Talk to me a little bit about that decision to go that route.
Yeah, we actually were early adopters of the third party. We felt pretty strongly that was accretive to our business. Those were different customers. When somebody was deciding whether or not they were going to have lunch or dinner and they went to a DoorDash or an Uber Eats, they weren't thinking about Marcos. And so we thought that it would help us. And it has, in fact. We've grown that part of our business by 610% between 2019 and 2021. And it's up 36% this year. So we'll do over $80 million in third-party aggregated sales. And it's been a big win. It's introduced our brand to a whole set of customers that didn't know who we were.
Hey, I got to ask you, Tony, one of the big things that we talk about with anybody who runs a company, and certainly in your space, inflation. We did see inflation prints that were much more positive, coming in less than expected, but they're still high. What are the inflation pressures that you're seeing when it comes to labor costs and to food costs?
Well, we're seeing what the rest of the industry is seeing. When we rolled through Q2, we had about a 21% increase in overall food costs, 24% in Q2, and P7 it peaked at 29%. And you're right, we didn't see it go higher here in the recent P8, but 29% is still too high. It's about 500 basis points pressure on the bottom line for us. And while we've been taking some pricing to try to mitigate the inflation, we've really been focused on trying to just take modest increases to ensure that we continue to grow our market share. And that's been difficult, trying to balance the two of staying profitable for our franchisees, but at the same time trying to be there for our customers in our communities as a real value for them during tough times.
Well, let's talk about the franchisees. Like Carol said, you have many stores across the U.S., 33 states, so you really see a lot of the country there. And I'm curious, what is sort of the common denominator when you think about what the biggest sort of issues for your franchisees, or I'm going to mispronounce that, for the franchisees, what is the biggest problem right now?
Well, it's funny. Every year is challenging, but 2022 has proven to be a more difficult year than 2020 or 2021. If you remember, we started with COVID in 2020. That was challenging, just getting stores open, being essential, trying to keep your team safe and keep the business moving. In 2021, we had a great resignation period. We're trying to find help through the summer months, and through the fall and winter was extremely challenging, just again to keep normal operating hours. And so we rolled that into 2022, and then here we go with wage increases and inflation. And I would tell you that the two biggest challenges for our franchisees today, one is retaining and finding good help to help them continue to grow their businesses, and then again managing their P&L to a point where we can continue our growth. And we've got about 240 or so new stores in development as we speak. We got about another 150 of those right behind it, and so we'll be a 1,500 store brand in no time. So really, we need people, and we focus on that every day, both in our recruitment efforts and our retention efforts, our cultural efforts, all those kinds of things.
Hey, Tony, just got about 25 seconds here. We often talk about recession, no recession. Based on what you're seeing and what consumers are doing, what would you say in terms of consumer spending, what the economy looks like here in the U.S.?
Well, I would tell you that they are looking for value. I would tell you that they are trying to feed their families on fewer dollars, and pizza is a great place for them to do that. They're being discerning in terms of number of items they're putting in their basket when they're purchasing, and so keeping a lid on price will mitigate the loss in the items sold, and people are just really trying to make ends meet.
I didn't hear recession, so no recession?
Well,
just quickly,
we're in one. If we believe we're in one, then yeah, it's coming. But pizza tends to do okay with recession, so it's not necessarily a huge concern for us.
All right, we got to run. Tony, thank you so much. Tony Lombardi, President and Co-CEO at Marcos Pizza. You have been listening to Bloomberg Business Week. Katie Greifeld, Carol Massar, very, very busy Friday. Most read story in the Bloomberg: the FBI seizing classified records, some are top secret, from former President Donald Trump's Mar-a-Lago home, according to court documents that were unsealed Friday. You can read that entire story. It's on the Bloomberg, and then we're awaiting that House vote on Joe Biden's roughly $437 billion tax, climate, and drug price package. So we're looking for the results of that vote later on, folks. Busy weekend. Catch our weekend show. Have a good and safe weekend.
from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
This is Bloomberg Technology. I'm Ed Ludlow in San Francisco, in for Emily Chang. Coming up in the next hour, second half momentum is picking up steam. Both the S&P 500 and NASDAQ 100 posting their longest streak of weekly gains since November. But earnings have shown a mixed outlook for the rest of the year. Is this tech rally going to last? Plus, Walmart, Home Depot, Target, Lowe's next week is a big one for retailers reporting earnings. Consumer sentiment has been rough the past few months, but new data suggests we're turning a corner. We'll chat all things e-commerce. And competition for electric semi-trucks is heating up after the Senate passed a roughly $347 billion initiative to boost the transition to clean energy and cut emissions. Right now, it's pretty much Tesla versus Nikola, but tax incentives could lure more players into the race. But first, the Federal Bureau of Investigation seized classified records, some marked top secret, from former President Donald Trump's Mar-a-Lago home. That's according to a copy of the warrant seen by Bloomberg. Wendy Benjaminson is our Deputy Managing Editor for Bloomberg News over in Washington. Wendy, thanks for joining us this Friday. Let's stick to the basics here. What did we learn from the unsealed documents?
Well, we learned not as much as one would hope. We learned that they did get about 24 boxes of documents from the Mar-a-Lago estate. We know that some of them were, as you said, top secret or even higher, sensitive compartmented information, which means that it's only supposed to be in a closed room, sealed off from cell phones and all sorts of other interference. And those were, sitting around Mar-a-Lago. We also know that they were searching for evidence of violations of 3 crimes, including a segment of the Espionage Act. I'm not saying Donald Trump is going to be charged with espionage, but there's a subsection of that which relates to mishandling of classified documents. We don't know that there is evidence of that. We just know that they got these documents.
Wendy, what is the concern here? What are the DOJ and investigators looking for?
Well, this all started when the National Archives, which keeps presidential records and then gives them to a president's library, they had been working with Trump's representatives throughout 2021. They got the transfer of 15 boxes in January of this year, and they began looking through them and realized that there was classified national security information. We don't know what exactly that means yet. And that prompted the archives to reach out to the Justice Department and say, hey, you may want to get these back. So that's what this action was. We don't know if it's going to relate to any of the cases against Donald Trump. It depends on, I think, when we know what the documents actually show. But you can be sure that the Justice Department will be combing through those this weekend. Wendy,
it's always the question, but what happens next?
I think we don't know is the answer, I'm afraid. We know that they will go through these and try to figure out what was in here and what crimes might be violated, and then they'll decide whether to charge or start talking to the former president.
Right. Well, we continue to follow your team's coverage, Wendy, over the weekend. That's Bloomberg's Wendy Benjaminson out in D.C. Thank you. Let's get a check on where markets ended the week with Bloomberg's Katie Greifeld out in New York. Katie, tech ending the week strong.
Pretty strong. It was a big risk-on day, as you can see from the board behind me. This isn't it. This is single stocks. But if you look at the indexes, for example, you saw the S&P 500 finish higher. You saw the NASDAQ 100 finish higher as well. There we go. You did see bonds rally a little bit, but just 5 basis points or so, Ed. I'm going to really just continue to fold that into this risk-on mood. You saw Bitcoin manage to squeak a little bit of a gain. Of course, the board has flipped to the after-hours trade, but Bitcoin higher. You can see it is $24,000 a coin. We haven't been at those levels in a little bit. And this was, again, a big finish to what's been a really big week. If you look at the NASDAQ 100, for example, this was the 4th straight week of gains. If you look back at this chart, you see a lot of red on this screen. That is the longest consecutive weekly rally since all the way back in November 2021. So I don't know, maybe we're at the bull market. But in any case, it's been quite a run, especially for those tech stocks. Now let's look at some of those individual names. As you can see, Pinduoduo up top, lower today. That's, of course, after news this morning about China delisting 5 of its largest state-owned enterprises, state-owned companies, rather, from U.S. exchanges. That weighed on ADRs. But you go down the list, again, very strong. You had chips coming back. You had Peloton surging on a Mark Gurman scoop, of course, that they're going to cut about 800 jobs. They're going to shut stores. They're going to raise the cost of some of their products, just part of this big overhaul that we're seeing at that company. And Tesla, too, rallying almost 5%. Maybe part of the broader risk-on mood in the market. Maybe because you're getting married, Ed. We'll remain to continue to watch that story. But again, a big move for Tesla.
Thank you, Katie. That's one M&A report that I'm able to confirm live on air. Bloomberg's Katie Greifeld out in New York. Thank you. And as you point out, Peloton, a big mover, but Friday, tech broadly outperforming in equity markets. I'm absolutely delighted to bring in Mel Lagamassino, CEO of We Family Offices, which has $15 billion in assets under management. Mel, it's good to see you again. What's your takeaway? Thank you. What's your takeaway from this week in the markets?
Well, I think that it's been a great week, and actually it's been a great month for tech. And I think that it has to do with the fact that people are starting to believe that we're going to get inflation under control. Inflation is what will kill the earnings of tech companies. And so I think that the mood is positive because they see that inflation is going to come down.
We're kind of breathing a sigh of relief out here in San Francisco at the Bloomberg Bureau now that kind of the bulk of earnings season is over. If you were to draw up your scorecard from earnings, particularly with the mega caps, what is your takeaway from this earnings season?
Well, I think it's been mixed. But in general, a lot of the companies exceeded expectations, both on the revenue side and on the earnings side. And I think the name of the game is not going to be revenue. The name of the game is going to be earnings and what happens with earnings. And earnings always look backward. you're talking about the last quarter. I think the big question with earnings is what's going to happen in the next 2 quarters. And that's why I think that good news about getting control over inflation is what's causing this rally.
You note that historically, tech in the first half of a year, not the best play, but then does rebound. And we've kind of seen that in the third quarter. Do you expect tech to continue to have momentum in the second half of 2022?
It's hard for me to say the second half of 2022, but I definitely see it in 2023 and 2024.
And where are those opportunities? What will drive that?
Because I think that tech is going to be, the way to deal with inflation is through productivity. What's going to help us with productivity is tech. And you have all the corporates spending money on their CapEx on tech. And so I think that we're going to definitely see tech continue to improve. Now, the valuations got a little bit out of control before. And so I think that, interest rates going up and the discount rate that's implied in that in terms of earnings has actually is what's made valuations come down. But I think earnings over time will be great for tech companies. I think, and actually in slower growth periods, tech tends to do quite well.
You've been all across the inflation story, but I noticed you also have been across the semiconductor space. What have you learned from the chip makers in the last couple of weeks?
Interesting that, and I was surprised actually at some of the earnings and some of the forward guidance, especially on the chip makers. But again, I think as the economy picks up, there will be more and more demand. And I think there's great opportunity. They did very well today.
Mel, I love speaking with you because you take such a broad view of the technology sector and you're always focused on cloud and AI. Why is it that you see such opportunity in what are sometimes regarded as nascent spaces?
Well, because I think that the opportunity for productivity with all of these technologies is tremendous. I think more and more companies are using AI to improve their business models. I think more and more of us are going into the cloud. I think, the computing power is going to grow exponentially, and I think it's going to totally transform the way we work. It already did after COVID. I think we've got this whole other leg coming that we can't even imagine what some of those changes are going to be.
Well, Mel Legumsino, CEO of We Family Offices, great to have you late on a Friday. Happy weekend. We'll see you again soon.
Okay.
All right, thank you, Mel. Coming up, more e-commerce headwinds. Despite a massive jump in engagement, I'll chat with Poshmark's CEO about his industry outlook. This is Bloomberg. Shares of online secondhand goods marketplace Poshmark dropped 8% on Thursday, the biggest decline since May. The company gave a weaker than hoped sales forecast for the third quarter as growth has been held back by higher inflation and a changing global economy. But there were some bright spots as user engagement on Poshmark jumped 70% year on year. Joining us to break it all down and cast an eye on the future is Poshmark CEO Manish Chandra. So Manish, the market's clearly focusing on this sales outlook. What were the factors behind that, around that pressure on sales growth?
Well, if you look at our Q2 results, we beat the guidance on both revenue and sort of came to the midpoint on the earnings. I think when we look into the future, when we look at Q3, one of the good things that's happening is that we are starting to see our growth and our rhythm and cadence be more like 2019, which is pre-COVID, which is a healthy thing for Poshmark because as people are going out, participating in events, going to weddings, going back to school, it's a great thing because you need fashion, you need to rotate your closet, and people are going back to the closet and then rotating it. So that's a good thing, but we're being cautious. I mean, it's early. We're sort of want to observe it for a few months, and that's reflected in our guidance.
Manish, remind us how Poshmark works. Essentially, you're pairing sellers of secondhand goods with buyers of secondhand goods, right? But talk to me a little bit about the profile of user on the platform, the types of folks that are buying goods there.
Yeah, Poshmark is unique in the sense that we allow you to turn your closet into a shop. So it really appeals to millions of people out there who have a closet. I think almost everyone has a closet, has some excess stuff to sell. So we really make it very easy to take the closet and start selling it. We provide everything built into the platform is shipping, payment processing, etc. And the beautiful thing is the item goes straight from the seller to the buyer. So we hold no inventory. And that allows us to have an extremely dynamic assortment, which has been a strong point, particularly in this changing sense of fashion going into the pandemic, coming out of it, going into from active wear to work wear to back to school wear. And then on the flip side, we have people who are shopping these closets, both for getting values and bargains, but also getting access to wide assortment. Everything you want, we believe, is in somebody's closet, so we put them all together, and that's Poshmark.
Manish, I want to get into the psychology of the consumer, but what kind of lens do you get into the health of the consumer? Are there users shopping on your platform because they're feeling the pain of inflation, so they're looking to the second-hand goods market rather than buying off the high street, off new products? What are the kind of macro characteristics that you're seeing in your users?
First thing is consumers are looking for value. Consumers are always looking for value, but in these inflationary times, they're especially looking for value. Number two is consumers' preference and tastes are changing. And a lot of times, traditional retail is not able to keep up. And what you're seeing with a lot of first supply chain famine and now sort of retail store glut is this mismatch of consumer supply and demand. And what we see with Poshmark is this ability to dynamically match from the closets, from people, this supply and demand. So that's the second thing is people are looking for latest trendy things, and that trends are changing. But the flip side of Poshmark is that consumers can also make money. And as people are sort of looking for extra sources of income, Poshmark can provide that as well.
Talk to me about Poshmark parties. What is a Poshmark party?
So two things. We have virtual parties that are happening online where people are selling together. We'll have a theme and thousands, sometimes hundreds of thousands of people will come together. In fact, our evening parties are so big that I've seen parties in the last few weeks that have hit 10 million items being listed in a single party from across the country. So they are really a group selling event where people are coming, buying and selling together. And then we take them physical. So we hosted a party in LA a couple of weeks back, and next week we have one in New York City. And there we have hundreds of sellers who come together, they connect with each other, they help each other, they learn from each other, get inspired. And we also have new sellers coming in where we help them activate their closets. And people who join Poshmark and learn there's something called closet consultation. They can see how to run their online business faster. So they become sort of a small manifestation of these virtual events.
Our Bloomberg Intelligence analyst, Poonam Goyal, is also excited about Poshmark's potential for growth outside of North America, international markets. Could you update us on the plans there?
Yeah, our Canadian business just hit 4 million users. We sort of celebrated 3-year mark and has more than $1 billion of inventory listed. So that market is coming along. And we launched in Australia and India during the pandemic. And as we are coming out of it, we are seeing the engagement and physical events starting to build the communities there. So we believe the paradigm of really finding the future of fashion inside your closet is well alive, not just in the US and Canada, but other countries as well.
All right, well, we'll look for updates on those new markets as they come online. Poshmark CEO Manish Chandra, thank you very much for joining us. The update on the second-hand goods market. Meanwhile, delivery startup GoPuff is tapping a new CFO to help it become profitable. Panera Bread's CFO, Ted Stedham, will join the same role for GoPuff, according to sources. Stedham worked at WeWork as global head of business planning and financial operations. He also served as CFO at Yum Brands' China business. Coming up, Europe's drought will further raise energy prices and disrupt trade as the Rhine River's water levels dip below a crucial mark. This is Bloomberg.
The gas storage itself is not sufficient. We are facing a crisis at the moment. It's been produced by the cut-off of Russian gas, but it tells us yet again just how volatile and uncertain fossil fuel prices are.
Gas prices will remain very high, and it also may result in some disruption.
We cannot magically get sort of tens or hundreds of gigawatts of renewable energy before winter. So it is a matter of saving energy. It's a matter of securing sources.
There should be more obligatory measures to reduce consumption.
The first step, obviously, is to become independent of Russian supplies, which in the end can only be managed by additional imports, mostly LNG.
Here today, we've seen the the reduction in the gas consumption by about 10% in the EU.
I think the effect of this crisis will be that Europe will be further down the path to emissions reductions than it would otherwise be.
That's some of the commentary on the energy crunch Europe is currently enduring. And things don't look much better on the trade front. Germany's Rhine River has dropped to a level that could disrupt the transport of fuel throughout Europe. The effects could ripple through the continent for months. Bloomberg's Guy Johnson explains.
As of this afternoon here in Europe, the Rhine River has become impassable at the critical waypoint of Kaub, just to the west of Frankfurt. This is something that we've been anticipating for really quite some time. You can see the water levels as they've been dropping over the last few months. They have now dropped through the critical 40-centimetre point at Kaub. That's just under 16 inches. That means effectively the river is no longer navigable for large barges. Now, this is crucial for Europe, not just for Germany, but for the whole of Europe. Let me show you what the map looks like here. So you've got Rotterdam up here on the coast. The River Rhine runs through Germany, through Cologne, just to the west of Frankfurt. There's Kaub, and then runs through the rest of Germany down towards Switzerland. This is a hugely important waterway. It transports all kinds of things up and down for Germany and for the whole of Europe. Think about coal, think about gas, think about diesel. All of these things go up and down this river. Big chemicals companies are to the east of Kaub as well. They will now be restricted. Big power plants that require coal to be floated up the river on barges will now see those supplies restricted. This comes at a time when Europe is already facing a massive energy crisis. The fact that we now have a drought in Europe that is lowering these river levels is only going to exacerbate that problem and pour further pressure on politicians to do more to deal with this economic crisis that is looming and getting worse and worse as we head towards winter here in Europe. So as of today, the Rhine is now closed at Kaub, and it looks like it's not going to rain for a while.
Thanks to Bloomberg's Guy Johnson in London for that update on the Rhine River. Some other stories to watch. 3 of China's biggest state-owned companies plan to delist from US exchanges. That's fallout from a dispute over whether American regulators should be allowed to inspect audits of Chinese businesses whose shares are listed in the US. The 3 companies that will delist are China Life, PetroChina, and Sinopec. Masayoshi Son has now lost more than $4 billion on a series of side deals he set up at SoftBank to boost his compensation. The Japanese billionaire took the unusual step of establishing personal stakes in a series of SoftBank ventures in recent years. That was a mixing of company and executive interests that drew the ire of investors. And Amazon, Oracle, and other data providers were pressed by a group of lawmakers about how they sell mobile phone location data. The companies offered assurances that the information could not be used to track women seeking abortion services. The Supreme Court's decision to overturn women's federal right to abortion has sparked concerns that location data can be used by law enforcement in states that have outlawed or restricted abortion to prosecute people who seek reproductive care. Coming up, it's retail earnings bonanza next week. We'll take a deep dive into that, e-commerce trends to watch out for, and much more. This is Bloomberg. to bring you some breaking news and headlines crossing the Bloomberg terminal. The House has enough votes to send a roughly $437 billion tax, climate and drug price package to President Biden's desk. The Inflation Reduction Bill is designed to boost the U.S. transition to clean energy and alleviate costs. We'll chat more about the bill's impact on electric vehicles later this hour. This is Bloomberg Technology. I am Ed Ludlow in San Francisco. For more on Peloton's news, let's bring in Bloomberg's Jackie Davalos, who's out in D.C. Jackie, what did we learn from Peloton on Friday?
Absolutely. Well, for customers, prices are going to be hiked up, and it's kind of a reversal from what we saw in April when we saw price cut for the bike and the treadmill. So if you were looking for a deal, you may have missed out on that one, but it's really part of this broader plan to shift more of its costs from the hardware side of the business to higher margin memberships. And layoffs are expected to impact around 800 people, mostly concentrated in the customer service and distribution and delivery type functions. And this is really bigger picture part of this broader strategy to overhaul the cost structure and redirect more of its capital to research and development. The memo to employees that Barry McCarthy sent earlier today, he outlines this rationale that, you need to spur innovation to spur revenue growth. And that's going to be key, especially when they've been burning so much capital.
Barry McCarthy, the Peloton CEO, said in this internal memo that cash is oxygen and oxygen is life. And clearly, they're worried about their operating health, if you will. But what's the wider context here, Jackie? They did layoffs in February as well. Is it that the demand for the product has disappeared, that people just simply aren't using Peloton hardware anymore?
I think it's a combination of things. The economic outlook has certainly shifted since the beginning of the year. And when he joined earlier in February, it was already undergoing this major turnaround plan, but it wasn't really sure where some of the pain points were. Was it demand? Was it just kind of this broader grim outlook? And what we're seeing now is that, they signaled they expect demand to soften going forward. And when consumer spend is really on the line, a luxury premium product like Peloton is more vulnerable. And, so future growth is somewhat hanging in the fray, especially, they've signaled that sales aren't going to be as strong. Now, when it comes to saving money, this is where you've seen somewhat of a vacillating in strategy. When they upped that membership cost earlier in April, that was signaling that, look, this is an area that they want to tap going forward. It's higher margin, it's recurring, predictable revenue. So you're definitely going to start to see them lean into that as the demand side of the picture becomes more uncertain.
Well, investors certainly like what they saw, the stock jumping almost 14%. Bloomberg's Jackie Davalos out in D.C. Thank you. Have a great weekend. Let's turn to retail earnings. Lots coming up next week from the likes of Walmart and Macy's. So let's take a little look ahead and talk about what to expect with Nikki Baird, VP of Strategy for the global retail technology company Aptos, and my good mate, Bloomberg's own Brendan Case out in Dallas. And Brendan, I'm going to start with you. This is the week for you, right? You're going to be at your desk. I know you're going to be just so much coffee, bracing for what's to come. But actually, we already have a good sense of what's to come, don't we?
That's exactly right. It is going to be a big week, but it's going to be a week that's sort of a sequel to an announcement that Walmart made a few weeks ago in which it warned that its profits were going to be down more than expected. And the reason for that is that inflation is just hitting people really hard, and it's leaving them with less money to spend, especially on general merchandise, as opposed to groceries. And I think what we'll be looking for next week, we'll be looking for any kind of clues or commentary they offer about how they see the state of the consumer and how people are going to be able to hold up or not as the rest of the year goes on.
So we've already heard from Amazon, the big sort of e-commerce giant. Actually, earlier in the year, we spoke to Andy Jassy, and this was his kind of assessment of the inflation story. Have a listen.
We thought that inflation would start to attenuate in 2022, and with the war in Ukraine, it just went the other way and has significantly accelerated. And so the cost of trucking and line haul and ocean and air and fuel has just substantially gone up. And I think that will attenuate at some point. No one knows how long that'll take.
So, Nikki, I played that soundbite, which was from June, the first week of June, because it seems like, in some sense, the path for inflation caught retailers off guard a little bit. Did the industry just kind of get inflation and how the consumer reacted wrong?
I don't know that they necessarily got the inflation part wrong. I mean, a lot of the goods that are on shelves in June were things that were purchased before gas prices really went up, before some of those stronger things really hit that drove prices up in other places like in grocery where the supply chain is much shorter. But I do think it surprised them how much consumer demand there was and how much consumers were still willing to spend as things opened up more. I think we're starting to see the impact of that now where July, I think, isn't going to be as strong retail sales as June was. Some of it is inflation biting into that discretionary spending, but I think as well, some of it is everybody's on vacation, everybody's out traveling, they're shifting their spending to other places.
Brendan, what's the e-commerce story here? Because I think one of the big stories of the pandemic era was the change in how consumers behaved and how those retailers had to adapt to meet that demand. What are we talking about now in the context of e-commerce?
Yeah, that's exactly right. And that's going to be a big watch item, too, for this quarter and the quarters to come. What you've been seeing most recently is that at the big mass market retailers, such as Walmart and Target, you're seeing the growth rate slow down or even flatten out for e-commerce demand. But a big part of that is just because people are going back to stores this year. They feel a lot better from a COVID kind of perspective. And another thing that's sort of noteworthy about e-commerce demand this year is that while the growth has slowed, it's still kind of holding its own. It's not as if it's going away. And just how fast that expands in the coming quarters, in the coming years, that's one of the biggest and most important questions in front of these retailers. And they're all investing a lot of money to be ready for that demand under the assumption that the e-commerce part of it will be steadily rising, if not soaring the way it did during the pandemic.
Yes. Nikki, it's an interesting time of year in summer And there are some names that you feel will do better than others, and some trends like the vacation trend that might have a factor in this quarter's earnings.
Yeah, I think so. I think, Home Depot and Lowe's are coming up from an earnings perspective. And for sure, people already spent their money on improving their home and they want to get out of that home. They don't want to sit on their deck. They want to sit on another hotel's pool deck instead. So that, I think, definitely is driving a lot of consumer behavior. And I think it's interesting to see just how much retailers sort of anticipated that pandemic behavior was going to continue and were taken somewhat by surprise when they really did shift hard to kind of different priorities from a spending perspective this year.
Yeah, well, one to watch for next week. Nikki Baird, VP of Strategy at Aptos, and Bloomberg's Brendan Case, of course. Thanks to you both. Happy weekend. Coming up, we'll talk about Ethereum's winning streak. And by the way, is the merge finally happening? Really? More on that next. This is Bloomberg. All right, time for our crypto report now. And Ether jumped 10% this week for a sixth straight week of gains. This in anticipation of a groundbreaking software upgrade to its blockchain. Ethereum's upgrade has been long awaited, and news around it has been welcomed by investors who have pushed its token price up by roughly 80% over the past month. Let's bring in Bloomberg's David Pan out in New York for more. David, everyone's been weighing in on this. The merge, it's close, it's exciting. Ethereum's all over the shop. Is it actually going to happen?
Right, so the merge has been on the roadmap of the Ethereum blockchain project's development since its inception in 2015. There have been several delays in the past several years, and there has been suspicion of the time of the merge. But based on the conversations with investors and developers, they are more confident than ever that the merge will happen in the next couple of months, based on a couple of reasons. And firstly, we've seen the merge on the testnet being completed without major technical glitches, which is a promising sign that shows the merge will actually happen in the near future. Secondly, if we look at the derivatives market, in particular the Ether options market, we're seeing a lot of investors who are betting on a price hike around the time of the merge. So those two things kind of indicate that there's a fairly high confidence level for the merge to happen in the near future.
Well, it seems like investors are positioning for this to happen, right? They're trying to get in because they anticipate further upward movement in Ethereum. But then there's a school of thought that when it actually happens, we'll see a crash. Explain that logic to us.
Yeah, so there's a saying in the crypto space, sell the news. At the end of the day, we have to remember that crypto market is a highly speculative market, and a lot of hot money, speculative capital, will be flowing from the large-scale investors into the market around the time when the merge happened because they're in search of arbitrage opportunities in a time of high volatility. Another reason might be that there might be other potential technical difficulties or glitches happening after the merge, which would discourage investors to invest more, to put more money into the project. So those are the two major reasons, based on my conversations with investors and core developers behind the project.
All right, all eyes on Ethereum then. Bloomberg's David Pan, thank you. Have a great weekend out in New York. Coming up, Congress now has enough votes to pass a roughly $437 billion initiative, but can it help the EV market bounce back? We'll discuss. This is Bloomberg. Let's look at the week that was in the world of electric vehicles, with Nikola beating expectations last week and announcing an executive shakeup this week, and Rivian cutting its annual earnings forecast, saying it would have a larger than previously guided loss on inflationary woes. And now we'll talk about the Inflation Reduction Act, which Congress has just voted to pass and pass on to President Biden and his desk, which the president says, according to headlines crossing the Bloomberg, he will sign next week. The bill could deliver a boost to electric commercial vehicles in this macro environment. Joining me now is Olaf Sackers, general partner at Red Blue Capital, a VC focused on early stage companies in the mobility and automotive space, and Bloomberg's own Kyle Stock out on the East Coast. So you and I, Olaf, have discussed this bill through its passage. What's your reaction now that it seems real and done?
So there are a few things that are happening all at once. The one is that there's a lot of political jostling in order to get this deal through, and it creates short-term confusion because it kind of immediately changes the subsidy regime, changes the rules around it, and that's going to create a little bit of confusion in the near term. It does correct for some of the things that were problematic in the pre-existing EV subsidies, that they were effectively regressive, that wealthy people were the ones that could afford high-end, Hummer EVs and Teslas, and yet, those aren't necessarily the people you want to be subsidizing with tax dollars. Now the bill is shifting the thresholds for who qualifies and which vehicles qualify to be more focused on the middle class, but it is still fundamentally regressive in a sense.
Well, why do you believe? I think your school of thought is that it misses the point that actually there's a much broader section of the global automotive market that needs attention, that needs more support to electrify.
Well, it's not just the automotive market. I think what you need to think about is what is the point of cars? They move people and they, to some extent, move goods. Especially if somebody's going to Walmart or something, they're holding stuff in their vehicle. But what we should be focusing on if we care about climate, and the two things that are tension in this bill, and we can get to them, one is America first, like these policies around American manufacturing, et cetera, and the other is around climate. But if you care about that second bucket, the climate bucket, what you care about is not electrifying vehicles, not making cars that people own that drive 4% of the time electric, but rather electrifying miles. And the miles that really matter are the ones that are driven by fleets. Of various kinds, whether it's commercial fleets, trucks, delivery vans, but also fleets like scooter fleets in cities like San Francisco, which are also high utilization, and also for delivery of food. A company like DoorDash is doing 1.6 billion trips a year. Why isn't there focus on commercializing those trips and subsidizing those trips through these kinds of subsidies?
So a big focus on the consumer. I want to bring Bloomberg's Kyle Stock into the conversation. And Kyle, give us a sense of where we're at in electrification in America. You wrote a fantastic story last week that basically points out that if you're anywhere in the States, but on the West Coast, for example, and you want to take a road trip, a classic American road trip in an EV, it's not that easy. Talk
Well, I think EV adoption is sort of ahead of where the narrative is. I think Americans are open to these vehicles, but the charging infrastructure here is still a big challenge. We lag China, Europe, South Korea, even Japan when it comes to the number of places to charge a vehicle quickly if you're outside of the Tesla universe. So that's because we haven't had subsidies like this in the past. We haven't had, robust policy like they have in Scandinavia and in China to really put these cords out there in the wild, and not just at, Whole Foods or the gym or your office, but at a national park, at the Grand Canyon. That's still kind of off the map for someone taking an EV road trip right now. So, this bill speaks to that, but Biden's giant infrastructure package also speaks to that. $5 billion that's going to start to be deployed this autumn should help cover a lot of those EV deserts, but we're not really there yet in terms of where you can go in these vehicles.
The other area is this whole energy crisis and the motivation to move to EVs. In your reporting in recent weeks and months, what do you see in the US consumer in terms of their willingness to transition to EVs, their ability to afford an EV?
The affordability is a huge chunk of it. I mean, these cars they were expensive to begin with. They're getting more expensive now because of the supply crisis, because dealerships can add on these market adjustment rates. And even if you're paying a sticker price, you're waiting months for one of these cars. So that's a big issue. A big thing in the bill that is going through now is a provision for a rebate for used EVs. And this is massive. Like, anyone in the EV universe is thrilled about this because in America, 70 to 80% of cars that are purchased are pre-owned. So this is the lion's share of the market. So to sort of have something that speaks to that buyer could move the needle drastically for the space.
So that's the kind of consumer side of the story from Kyle. And again, your point is that we shouldn't just focus on cars. So if I said to you, here's a pen, go back and rewrite the bill as you would have written it, what would you have put in there to hit those targets, reducing emissions and advancing a transition to sustainable energy?
Yeah, I think the focus on going to a national park or something like that is not how people actually use cars. Cars are designed today for a family to go to a picnic, right, and have all this trunk space and all the kids in the car. But in reality, most of the vehicles are actually being used to commute, or they're being used for trips that people take for retail. And usually there's only one person driving that car. And so I wrote a book, and the book is basically about the transition to what I call the trip economy. Basically, these trip marketplaces that bring things to you or take you places. Uber, Amazon, DoorDash, these are all different ways in which you can buy trips for specific purposes. And this trip economy rationalizes all the inefficiencies of car ownership. Car ownership is extremely wasteful. Think about all the metal that's being moved all the way to take you anywhere that you're going that's just unnecessary. And the real opportunity is to not electrify the energy that's being used to move all that weight, but actually to change how much energy is needed in the first place to move people and goods for the economic purposes of growing the economy, et cetera. So if I were to rewrite the bill, I'd be be focused on those kinds of opportunities. Focus on commercial fleets and how do you accelerate electrification. If you look at where electrification is really happening today, it's buses in cities. They've already, close to 50% of those buses have already transitioned. If you look at Amazon, you mentioned Rivian before, they made a massive purchase of Rivian vehicles, and that's really what is the tailwind behind Rivian. Right. Those are the use cases that really have rapid adoption, and those vehicles are the ones that are doing high amounts of miles. DoorDash is using e-bikes in many cities to deliver goods, and they're bundling the packages that are being delivered. So you don't have to, instead of having consumers take individual trips to a store, you've got multiple trips being bundled into one ride. And similarly with Uber, you're seeing in London under pressure from TfL that Uber is actually much more quickly electrifying than consumer fleets. So that's if you want to shift miles to electrification, those are the things you should be focusing on.
We could have spoken about this all night, all weekend, perhaps. Big thanks to Olaf Seggers, general partner at Red Blue Capital, and Bloomberg's Kyle Stock, good mate of mine out on the East Coast. Thanks to you both. Well, that does it for this edition of Bloomberg Technology Monday. We have BBG Ventures President Student Line to chat big tech regulation and the investing landscape. Don't forget to check out our podcast. You can find it on the terminal, as well as online on Apple, Spotify, and on iHeart. This is Bloomberg.
The great sci-fi art of the mid-20th century teased a vision of the future with one distinct element in common: a life for humans in outer space. Whether vacationing on an exotic new planet or commuting to the moon for business, space travel seemed like it was just around the corner. Yet here we are, a half-century later, and only about 500 human beings have ever left the bounds of Earth's atmosphere. But thanks to a set of ambitious private companies betting on the promise of space tourism, that long-awaited future could be here sooner than we think. For most of the history of spaceflight, governments have been the prime force behind nearly every aspect, from planning to funding to crew selection. But as early as the 1980s, proposals for commercial space tourism began to emerge, along with innovative solutions for getting people there, such as the wild concept of sticking a 74-person passenger cabin in the cargo bay of a NASA space shuttle. Although various non-astronauts have been selected for missions over the years, true space tourism didn't happen until 2001, when an entrepreneur named Dennis Tito coughed up an estimated $20 million to hitch a ride with the Russian Federal Space Agency for a week-long vacation aboard the International Space Station. 20 years later, we're seeing a new contender in this final frontier of tourism: private companies.
It's becoming a private enterprise situation, still very high risk with a high reward, potential reward. But government is really out of the business of flying people now, and it's really going to be companies like Elon Musk and Jeff Bezos and Richard Branson that do that heavy lifting. Commercial space tourism is usually about taking the non-astronaut, the private citizen, into an orbital or suborbital flight. So you get a short amount of microgravity experience, and you can float and take some photos, and then you come back. This was something that technology had gotten to a point where the private sector was going to make a business out of this. There are multiple companies that want to get to the place where they fly people into space.
The first of these is Blue Origin, founded in 2000 by Jeff Bezos. Using the autonomous rocket system New Shepard, a tribute to the first American in space, Blue Origin plans to launch up to 6 passengers at a time, offering a rarefied treat of 62-mile high views and a momentary experience of weightlessness. Booking officially kicked off in May 2021, with the very first seat to be auctioned off for charity. Meanwhile, Richard Branson's Virgin Galactic has also been pursuing a viable form of suborbital tourism, aiming for a launch in 2022 once Sir Richard himself has taken flight.
I'm hoping to be able to go to space. I'd love to be able to coincide it with the moon landing and go to space. So I've got the whip on the team, and we'll see how we go.
The company claims to have lined up over 600 seat reservations so far, including Justin Bieber and Leonardo DiCaprio. Virgin has projected that the final cost of the ticket will be at least $250,000, or roughly $50,000 for each of the 5 minutes or so of weightlessness that you'll get to experience. Although costly, both companies' offerings aim to make suborbital flight a regular form of adventure travel, eventually driving down costs at scale to expand the customer base beyond the orbit of celebrities and billionaires. The third major contender is Elon Musk's Spacex, which has set its sights even higher on orbital flights, which are
a whole nother level of complexity and energy and danger. When you go suborbital, if you're just going to go up above the von Karman line, which is 100 kilometers, or about 62 miles, you only need to get up to maybe 5,000 miles an hour to get up there, and you go basically straight up and then straight back down. You don't have the reentry heating that you would see coming in from an orbital. So when you go orbital, I don't care if you're a baseball or a battleship, you've got to go 17,500 miles per hour, not just 5,000 miles an hour. The energies involved are much greater. By doing that, SpaceX has gone another level up, and that's what they're doing with the Inspiration 4.
Visit inspiration4.com for your chance to go to space.
Inspiration 4 is the first planned all-civilian mission into orbit, slated to launch in late 2021. The crew will bring their own set of diverse perspectives and backgrounds and experiences to test how a group of different people, namely people who aren't professional astronauts, could fare in space.
Until now, astronauts have had to be physically perfect, and this mission is changing that. And so I feel incredibly honored to be representing those who aren't physically perfect. At age 10, I was diagnosed with bone cancer, and I was treated at St. Jude Children's Research Hospital. And I spent a year there undergoing intense chemo and also surgery that ultimately saved my leg. I now work at St. Jude as a PA, a physician assistant, and I work with leukemia and lymphoma patients. The kids we work with are so brave, and they are very excited to watch me go to space because this is showing them that, they're capable of doing this as well.
Haley, along with 3 other crew members, will spend 3 days in space, orbiting the Earth every 90 minutes before landing back off the coast of Florida.
Well, when you think about access, the first astronauts for the United States came from the test pilot side. And so women weren't allowed to be a part of that. We have somebody in their 20s, somebody in their 30s, somebody in their 40s, and somebody in their 50s. And so there can be access in all kinds of ways, whether you're talking about age, whether you're talking about gender, whether you're talking about race and ethnicity, and all of those things.
The first time, people are going up into space and not sent there by a superpower like the United States or Russia or China, well, that's really significant. And, you've got to, be very thoughtful about it. The whole game plan right now is to make space really affordable and, accessible for everybody so that you can have fishing buddies going to space someday. But the first is special. And so with that, we wanted to have, a crew selection process that could make space available to everyday people.
Getting to space is only the first step for space tourism. The next challenge is what to do and where to stay when you get there. Axiom Space is planning to launch the first segment of a new commercial space station in 2024. Their $2 billion project, called Ax Station, will become the first free-flying private international space station. Or, to use a more consumer-friendly term, a space hotel. Axiom isn't the only company out to make your space stay a little more comfortable. Bigelow Aerospace has been building what they call expandable habitat technology, like their B330, an inflatable pod module that expands once in orbit.
There's even one attached to the International Space Station right now. They've been testing it. And you take it up, and it's rather small, and then you inflate it. And it seems to be working very, very well. This is likely to be the first kind of tourist hotel that you're going to see up in space. First of all, it's easy to carry instead of this giant tin can with all of that. The inflatables are lighter. You can just blow them up, and they get a nice big size for about less than half the weight probably.
But even as space missions become accessible to civilians,
the risks of going to space are incredibly high, and you could die 1,000 ways that we can think of and 1,000 other ways that we can't think of.
This is Michelle Hanlon. She's a space lawyer at the Mississippi School of Law, focused on protecting humans in outer space.
Now, I'm not an attorney for any of the space tourists, so I haven't been privy to their private contracts, but I can tell you that the FAA requires certain waivers to be in those contracts. So, for example, the FAA says, well, we're not going to make you make your spacecraft to a certain safety level. We are going to make you spacecraft operator. Make sure that you inform your space tourists of all of the hazards that you know of. I imagine a very long waiver, all the ways you can die in space. and you have to understand that there's health risks, and you have to indemnify the US government if you are launching from the United States. So those are things that we know a space tourist has to sign and has to waive. So now let's go back and think about our space flight participants. The FAA calls space tourists space flight participants. They don't call them astronauts. Why is that important? If you're not an astronaut, there's no obligation to rescue you if something goes wrong. It's a lot of money to set up a rescue launch, if it can even be done. It's something really important to think about, and that difference as we cross this threshold from having astronauts in space to having real people like me in space.
And when we are able to make it to space reliably enough, there's still a host of other legal and ethical issues to consider before space tourism can truly take off.
There are so many gaps in space law that we are going to have to put in a lot of sort of basement ideas. And so, for example, the Outer Space Treaty is a treaty that offers principles and guidelines for state activities, for the activities of national governments. It doesn't talk about private entities. It doesn't talk about humans in space. So now if something goes wrong, so let's think about all the times hotels on Earth are sued, right? So slip and falls, you step on something in the bathroom, you sue the hotel, and it becomes a private lawsuit. Because of the vagaries of international law, if something happens in space, well, boy, you can sue the state that launched your spacecraft, you can sue the company that brought you there, you can sue the hotel, you can sue the individual, you can sue every government related to that, because the way the Outer Space Treaty and the Outer Space Regime have set this up is that anything that happens in space first has to go through a diplomatic channel before you think about suing in a court of law. And so every single slip and fall in a space hotel is a diplomatic nightmare. And so we really need to figure that out before we start sending a lot of people there. You think about human rights in space. Here, we don't think about a human right to oxygen because it's kind of all around us and free. It's not in a space hotel. So what happens if something happens and the oxygen depletes? Who gets the oxygen first? And then, of course, let's not even think about the labor. How do you treat your labor in a space hotel where that person may be there for 2 or 3 years without coming back to Earth? So a lot of things to think about.
Space habitats are more likely in the near future to focus on research missions and be a home for experiments that can't happen as easily back on Earth.
Space hotels, I think they garner a lot of headlines and a lot of news, but at the same time, that's not the first thing that you're going to see happen. They don't offer the compelling business case, I think, that you'll see from a place that wants to manufacture pharmaceuticals or a new type of crystal or some type of filament or fiber optic cables and other things that you can do in microgravity. The things that are actually, a high value finished good, when you get that back to Earth and you sell it for a very, very huge profit margin. That's what's likely to happen in space, as opposed to having a real estate platform that you sell to a tourist. A space hotel is really interesting, and it will probably happen, but it's not likely to be at the forefront of space commerce.
Even if space hotels are right around the corner, don't get too excited about booking a trip in one.
It's not a cheap ticket to ride to space, and it's going to be millionaires and billionaires and that sort. But at the same time, the point was made that in the early days of airline trips, that was also a completely unaffordable ticket for most people. Those people who flew were people of means, and over time it becomes affordable to the masses. And I think that's the goal for all the entrepreneurs in space as well, to get those costs down to a point where it's not $10 million or $5 million or $300,000 ride into suborbital space, and it becomes more like buying a first-class ticket to go to Europe from the United States. So that's the goal, and the question is, can we get to that point?
Given the immense operating costs of getting to space, it may be years, if ever, until space tourism becomes a profitable venture for any of these companies. Virgin Galactic, the only publicly traded company of the three, has had a particularly rocky year, initially riding on the momentum of a SPAC deal, but more recently beset by launch delays and major funders, including Branson himself, selling large quantities of their stock in the company.
Space is really, really, really hard, and it's an absolute cliche, but it's one that happens to be very true. It's just really hard to do. That's also the reason that you've seen the delays that Virgin had talked about flying years and years ago, and it became such a crazy point that Richard Branson actually stopped talking about it when he was asked, because it was never going to be when he predicted. But it's not insurmountable, and investors have stepped up because this is something that is doable.
Despite the astronomical dangers and costs of getting to space, it may ultimately follow the course of other once fanciful modes of travel.
Wright brothers having, what was by modern standards a very unimpressive first flight, at Kitty Hawk. I mean, you had like less than 20 years later, you had your first airborne ambulances being used to save lives. Fundamentally, the world is a more interesting place when people can go and dance among the stars and such.
The lure of space is innate. It's in our DNA. It's that exploration bug. We are an exploratory species, and we want to go out there and see what's out there.
That vision that I had in 1969 of seeing normal human beings travel into space, it's finally beginning to happen. When you get a bunch of people up there and they can all see it for themselves, that'll create even yet another revolution in how we treat our planet and the way we think about it.
So while 2001 came and went without quite looking like Stanley Kubrick's ultimate space fantasy, 2021 might finally be the year we're catching up.
If you visit California, you might be inclined to go to Disneyland, or jump in your convertible and take Highway 1 up the coast, or maybe make a pilgrimage to Yosemite. All very fine choices. But if you're the kind of person who revels in our planet's extremes, then it's Route 395 that you're after. This one glorious road will carry you from Death Valley's desert floor to sky-high views of Mount Whitney. You can see the 5,000-year-old bristlecone pines, the oldest living organisms, or the bizarre tufa towers of Mono Lake. And true to California's boom and bust spirit, you can saunter around the ghost town of Bodie. What a novel experience to find an empty American city where all the businesses are shut down. To do 395 upright, it helps to have a guide, and mine is a man named Jan, and his crew, Heron, and Lemmy, the hardest partying dog of all time. Jan agreed to show me some of what 395 has to offer, but only if we agreed not to disclose any locations.
My name's Jan Swirstra. I'm an industrial designer out of LA, and I spend a lot of time camping and a lot of time in the Eastern Sierra. It's a place I love, and sometimes I'm known as 395 North because my Instagram account, and I don't like to be known as that, but I'm trying to use it to set a good example and do more with it than just social media.
Where did we end up camping? We got here late last night. I wasn't sure where we are.
This is BLM land, right on the outskirts of National Forest, and it's one of my favorite places in the world. Basically, everything outdoors wrapped into one.
Yeah.
You know.
Think about California, man.
Oh man, we have so much national forest and public land that you can literally just cruise out and find a place to camp. It's ours.
What I wish was mine is Jan's sweet truck.
It's a 2019 Ford Ranger. Has about 200 watts of solar in it and a fridge, and has everything that an RV has except for a toilet, which is on a smaller, simple scale.
And you drive us around day to day in LA, and then just roll out when you want.
It's my daily driver. Handles great, and then when I'm done with work, I can just bail and go camping. So the camper basically has only what I need. Think of it as backpacking with a car. The fridge has a couple compartments. This is just a kitchen box, stove, utensils, and a bunch of stuff. This one has just dry food. Then when you get inside, there's a bed. The bed flips up, so you've got tons of room in here. This awning is phenomenal. If you want to pull that over.
That's cool.
You just pop that up.
Sorted.
So, home on wheels.
Yeah.
This is my vacation house.
Yeah, it's so nice, man. Even with his nomad lifestyle, Jan faces the same big question as the rest of us. Do the internet and smartphones have to ruin everything? When you find the super special, beautiful spots, is that you busting out a map and like looking where might be cool to go, or is it word of mouth and just getting to know people, the locals? And
if I see a dirt road, I just want to go down it. So a lot of it's just aimless rambling. It's a desire to just see something. Check that out. For some reason, it's more fulfilling than getting a recommendation from somebody. Or there's tons of apps and websites now, road trip apps, camping apps. They've proliferated. The knowledge is accessible on the internet, right? I used to fight the geotags, and I would get really pissed off. I'd be like, why are you posting this place? It's gonna blow up, it's gonna get trashed. Now I've realized that you can't fight it. The internet has just shrunk the world. So we're not gonna stop it. We're not gonna stop people from going there. So I'm a lot more focused in conversation now with trying to set a good example. When you go, pick up your trash. When you're pooping out in the wilderness, don't leave your toilet paper on the top. Make sure you follow good steps for leaving no trace.
as a thank you for this quick guide to pooping etiquette, we made Jan, Heron, and Lemmy some tacos. And we all took in the night sky and knocked back a couple of drinks. Take that, Apocalypse. The thing about good times and serenity in 2020 is that they're fleeting at best. After we split up from Jan and continued on our way, smoke started to envelop us. The plus side was that our RV no longer smelled like feet. The downside was breathing. My man David here suggested that we try and outflank the smoke by cutting through Yosemite. Without a reservation, we had to talk our way in.
Yes, no stopping, no getting out, and yeah, no problem. We just wanted to get through.
It was a beautiful choice.
Glad we got out of the smoke.
Whoa, okay.
But not quite as effective as we had hoped. Fast forward 4 hours or so, and we had managed to trade the smoky majesty of Yosemite for the smoky, look at it, strip malls of the Central Valley. We have made it, sort of out of the smoke, all the way across Yosemite National Park and here to the gorgeous Central Valley of California. We're off to see a kind of surprising tech startup that is making some pretty strange machines to serve all the growers out in this region. And we're here in near Fresno. This is California farm country, right?
We're just south of Fresno, a town called Kingsburg. So we're right in the Central Valley of California. Very, very large farming valley here. It's kind of considered the breadbasket of the world.
The Central Valley stretches out over about 20,000 square miles, and the farmers here produce about 1/4 of the food that Americans eat, including a whole lot of fruits and nuts. Tell me a little bit of the background of Gus. I know some of this is like a family business. The roots of this go back a ways. Tell me kind of like how we got to what's essentially like a startup, I guess.
Yeah, definitely. So the founder of our company is Dave Crinclaw, and he started the business back in 1982. He started with basically with his dad was commercial spraying of trees and vineyards. Got to the point where our biggest challenge was labor, just the shortage of it, really. He was forced into innovating, and he had this idea for quite some time about doing a driverless sprayer, and it finally got to the point where he said, you know what, I either got to get out of this business or I'm going to innovate.
Organic or not, crops need to be sprayed, and this process has to take place a few times a year. This means hiring a lot of people to work long hours under serious pressure. And so, just like the tech bros to the north, Gus decided to solve all of its problems with robots. On this like labor point, you guys have set this up where you can have somebody in a truck and that one person can monitor, I think, like 8 of these.
In order to operate Gus, you have one guy or girl that sits in a pickup and they monitor from a laptop computer. So that person is basically just watching all the vehicles on the screen. They can monitor up to 8 of them at a time while they're out there spraying in the orchard. And so that user interface really provides them with all the information they need to make sure that the machines are safe and that they're doing the correct job. So it tells them what speed they're driving, the engine RPM, the amount of gallonage per acre that they're applying at any given time. So if any one of the machines has an issue, it's going to send an alert to that laptop.
Much like a self-driving car, these beasts use GPS, LiDAR, and cameras to see and navigate the world around them. They also rely on pre-built maps of the orchards for extra guidance. Gus builds the machines right here, and then takes them out for robot training on this orchard next door. It's here that the company learns if the machines will behave and do as their software and human masters command. So this is kind of like this is a test orchard where you guys put it through the paces and work on the technology?
Yeah, so this is our test orchard right here. It's right by our building, as you can see in the background. So every new machine, as it comes off the assembly line, it's put through a commissioning test right here. We test all the sensors on the machine, autonomous computer, all the safety systems, make sure it's doing what it's doing prior to when it's delivered to a customer.
So what's it doing now?
So right now he's doing a test spray. So he's just turning the water on to make sure that the system comes up to pressure, spraying water out of the nozzles just to make sure it's all functioning properly.
Okay. It's got like a crazy turbine at the back, or?
Yeah, so it's basically just a big fan.
Okay.
And that fan's driven off of the Cummins diesel motor, and it just basically creates a big airflow.
Gus is already selling these vehicles to brave modern farmers. And people the world over have taken notice of its machines. And have you just sold them in the Central Valley, or like throughout the U.S., or even overseas, or where are they going?
Yeah, so right now the majority of our machines are here in California in the Central Valley. However, we do have machines and customers in Florida, in the citrus industry over there, as well as Australia.
I think you started selling them in like December of 2019?
Yeah, right? So we started taking orders early last year for the sprayers, and the first deliveries we made were in December of 2019.
Okay, so. And how much do they cost each?
So our retail price on these machines is $285,000. So
it's like it's not a small investment, but I'm sure the regular sprayers aren't cheaper.
Yeah, I mean, we're honestly not too far away from conventional equipment on our price, and the main thing is that the return on investment is very, very quick due to all the labor savings and the increased efficiency. I mean, these machines, they just thrive. But basically what we're doing, besides this machine, this is our first machine, we call it Orchard Gus, mainly designed for your nut trees, as well as citrus and fruit. In the future, we're working on a few other projects. We're going to do more machines. One of them is actually a vineyard sprayer, so vineyards are much tighter spacing, so the machine has to be physically smaller, and then we've got our eyes on doing a lot of other innovating.
That right there, friends, is a Central Valley farmer putting his whole fruit basket on the table. Gary's TED Talk can't be far off. And with that, it was time to get back in the RV and to confront what happens when three men are bested by their own failings and the forces of entropy. Next on Hello World, we cruise into the Mojave Desert in search of a lunar lander.
We have instruments that we are going to deliver to the South Pole of the Moon in December of 2022. Instruments that are trying to scan the surface of the moon.
And hang with a test pilot who walked away from this.
Meet Betty. She lives by herself, but for the last few months, she hasn't been alone.
LQ, tell me a joke.
Did you hear about the claustrophobic astronaut?
No.
Apparently, he just needed a little space.
Most technology isn't made for 93-year-olds. But this woman is making sure that this particular robot is.
I like you. Who are you?
She's researching the way we interact with machines. And if she has her way, robots will soon be a trusty companion for all of us.
My name is LQ. How can I help you?
As technology replaces old jobs, it's also creating new ones. I'm Aki Ito, and I'm here to show you the jobs of the future.
My name is Danielle Ishak, and I am a human-robot interaction researcher. It's really hard to intuitively design a robot meant for a consumer audience. You have to make sure that it's a robot that people want, people know how to use, and people value.
Danielle works for an Israeli startup called Intuition Robotics. Its US office is here in downtown San Francisco.
Hello?
Hey Danielle, it's Aki.
Come on in.
The company is funded by a couple big names like Samsung and Toyota. Full disclosure, Bloomberg's venture capital arm is an investor too.
This is Ellie Q.
Can I take her out for a spin?
Please.
Ellie Q, tell me what you can do.
I am a proactive social robot designed for older adults. I can connect you to your family and friends, and even play music.
These features might remind you of the Amazon Echo, but you'd be missing the point if you compared her to a smart speaker. She's not meant to just be useful. She's meant to be a companion.
Why don't you take a break and have a drink?
And that's why she has a head that can nod and make other subtle gestures you might expect from a pet.
Through our research with older adults, we're finding that almost on a daily basis, we see that somebody tells her that they love her.
Really?
Or that they like her.
Like,
or that they miss
literally,
her.
I love you?
Mm-hmm. They'll also tell her, I'm depressed, or I'm lonely. They'll open up to her in a way that they might not necessarily open up to a human, because they don't feel like they'll be judged.
LEQ isn't on sale yet. But a prototype is already in the homes of about a dozen early testers who live in the Bay Area.
LQ, tell me what the weather is today.
Danielle's job is to figure out what's working and what's not.
Sorry, please rephrase your request.
And she does that by visiting each of her testers twice a month.
How important are these visits to your job? They're critical. We're building a product for people who we are not. I'm not a senior, and how could you know how to design for somebody if you don't do research? Because otherwise, you would just be designing in the dark.
Jobs like Danielle's are just starting to emerge. Until recently, robots were mostly in factories, separated from humans. But now, they're finally getting cheap enough, small enough, and smart enough to be in our homes. This has created a whole new challenge of designing robots that people will actually want to interact with. And that's where Danielle comes in. Her research has helped shape every little facet of LEQ, from the way LEQ moves to the way she talks.
It's a very special job, and it can be really hard, and it can be really frustrating, but at the end of the day, it's incredibly rewarding. And I think the most rewarding part about it is when I see the joy on the users' faces, like that they saw their feedback turned into something real.
Today, we've driven east of San Francisco to go see one of Danielle's research participants.
LQ, tell me something interesting.
Did you know that Ronald Reagan was a lifeguard in high school and saved 77 people's lives?
Now see, this is where a conversation is. She should open up and I should say, no, I did not know that. I expect her to be able to continue a conversation for at least a couple of comments.
Yeah, and why is that?
Why?
Yeah.
Because that's companionship.
When Betty was around Danielle's age, she was working with some of history's very first computers.
When I was finishing up my master's degree, I was working at Harvard in the computer lab when they were building Mark IV. a large room-sized computer. But now, this artificial intelligence stuff is amazing. LQ?
Yes?
Schedule a doctor's appointment.
No problem. I'm working on it.
When Danielle brought along the idea of working with robotics for the elderly, I said, are you kidding me? Will older people connect to a robot? And she said, I don't know, let's research and find out.
Danielle grew up here in this suburb of Atlanta. Her parents spent much of their childhoods in Israel and met in the US.
We as immigrants, we understood that we might need to work a little harder. In fact, I feel that rather than taking away from Danielle, it gave her so much more, because she understood the fact that you need to run after your dreams and work really hard, no matter what the challenges are.
School didn't come easily for Danielle.
I have dyslexia, and that very much affected my self-esteem academically.
The principal of the school did not recommend her to take advanced classes. She fought for it, and she got into it, and she did very well with them too.
Danielle's first job out of grad school was at X, the secretive research facility founded by Google. It's known for dreaming up all kinds of wacky, far-flung ideas.
Can you tell us about the moonshots you worked on? No, I can't tell you too much about the projects that I worked on. I can say that I was working on robotics.
She loved the job, but wanted to work on something that would reach real consumers sooner. So she left X after a year and joined Intuition Robotics. She's been working in the field for 4 years now, and it took her a while to find her footing in a male-dominated industry.
I've gone to different meetups where there'll be like a circle of men with their like zip-up jacket with their like company logo on it and a beer in their hand. And I'll come in with lipstick and nobody wants to talk to me. This is my closet.
So at first she did her best to fit in, wearing a pair of glasses she didn't need and toning down her style.
So what's the kind of thing you used to wear to a conference? Stuff like this, blousy things that make you look like you're 40.
But that got old after a while.
And what's the kind of thing you wear now? Now it's like I just enjoy being kind of expressive and playful in what I wear.
Before we wrap up for the day, Danielle has one more LEQ tester to visit. Joseph is 97. And he's had the robot in his home for 8 months.
How are you?
I'm fine. How are you?
Good. How has Miss LEQ been?
She always tells me to take a drink of water, at least 4 times a day.
So we added a whole bunch of new facts to LEQ.
Did you know that a cup of chopped red bell pepper contains more vitamin C than an orange?
Okay. What did you think of that?
Certainly the print was, I could see that
Okay.
quite clearly.
What about this?
I can see that. LQ, play music.
No problem. It will begin shortly.
By 2050, almost 500 million people are going to be 80 or older. And if current trends continue, more and more are going to be like Joseph and Betty, living alone.
LQ, stop.
Today, both of them are doing okay. But some of Danielle's other participants have been struggling.
Is it kind of hard to leave them at the end of the day? It is. Some of our testers are pretty advanced in the stages of depression through loneliness and isolation. And at times, I know that LEQ is cheering them up in their day, but I know that it's only part of the way. No source of artificial intelligence robots will ever be able to replace humans and human companionship or human care.
The key to Danielle's work is to embrace that very limitation of machines.
Robots should help humans do what they love, help humans interact with more humans, help humans in general. Not pull humans away from humans, not take humans' jobs and leave humans without purpose.
Whether it's in our workplaces or in our homes, robots are soon going to be everywhere. And it's up to Danielle to make sure this robot-filled future leaves us just a little better off.
So don't be afraid. And if you are afraid, come and join us, because I promise it's a friendly place.
If you're like the estimated 74% of adults in the US who use YouTube, this might be what your home screen looks like.
an algorithmically curated look into what you like to watch. Maybe some tips on how to prepare a new meal, or your favorite vlogger's latest video. But if you're a parent who shares your phone with your children, it probably looks a little more like this. Kids content on YouTube is huge. Views for videos can reach into the billions. 5 of the top 10 videos in all of YouTube's history are either music videos or kids videos, with Baby Shark having more views than people on the planet.
YouTube has created a revolution, not an evolution, in the way kids and families consume video content, and that extends then into how they view toys and play and all of the associated things that go with that.
Kids' YouTube, for the unaware, can be adorable. It can be boring. It can also just be flat out strange.
Here I am, how do you do?
But often it involves toys. And for toy makers who embraced the platform, it led to record success.
I think LOL surprise unquestionably is the biggest phenomenon that has ever happened in the toy industry.
This is the story of how YouTube changed kids' toys.
Play patterns, the way children play, is timeless. But how we deliver on those play patterns through product and how we market that to children has changed quite a bit over the years. And I would say that the last 5 to 10 years really ranks right up there with the 1950s when TV commercials directed to children was first launched by Mattel.
This is Nancy Weirs. She led the Barbie brand during the 90s and spent 4 years as the chief marketing officer for Spin Master.
It used to be that there would be a few playthings that parents would bring into the home or that children would create themselves, like a stick and a ball becomes a plaything. And the industry was at a certain level of volume at that point. Mattel was very innovative and actually put the first product on TV and advertised it to children.
Let's play house.
This created a huge explosion in the toy industry that unfolded across decades.
The hit of the day when you're ready to play, everyone knows it's Winky. Here he comes, greatest toy you've ever seen, and his name is Mr. Machine.
G.I. Joe, fighting man from head to toe, on the land, on the sea, in the air.
When you go back to the 1980s, what do you think of in terms of hit shows? You think of things like Masters of the Universe. You think of the original Transformers and Care Bears. The joke was they were 22-minute commercials.
Just close your eyes and care.
Let's make a TV show which is really promotion for our property or IP to help sell toys. There were a lot of those famous characters in which kids absolutely loved it. They were totally entertained, but there were huge toy lines behind them.
This is Jim Silver, a 37-year veteran of the toys industry. In 1999, he started a consumer toy review magazine called Toy Wishes, and now he's the CEO of an influencer talent management group, TTPM.
Regulations changed through the years, and also parents became aware that they were purely commercials. And you saw a lot of the new channels, the Disney Channel and Nickelodeon, they realized that wouldn't work anymore. And to them, entertainment came before licensing.
What happened over time was that toys started to become designed for a 30-second commercial.
Close this, a mild manner toolbox. Open, it's a micro machine USA. Cruiser, mini micro machine, vehicles, planes, opposed to the police station, the marina, the mini motorcycle repair shop, the gas station, the construction office, work, the real working drawbridge, highway, passenger wrapping, garage doors.
So if you couldn't explain it in a 30-second commercial, cost reduce it out of the product and just stick with what you could say. And features of toys, magical features using electronics, lights and sounds and mechanical movements, that magic, like they don't know how it happens, that became more and more important.
The sound of power is heard.
Wonderful Batman! See ya, Batman.
Batman's turbo-powered Batmobile flies into high gear.
Since 2000, with cable channels dedicated to kids, Disney Channel, Nickelodeon, Cartoon Network, there became the opportunity to reach kids in mass numbers every day of the week. And so the toy industry has continued to grow.
The toy industry, for the most part, was a pretty solid business, just growing a couple percent a year here and there. There'd be big years here and there when there's maybe a hit movie, like a Star Wars movie come out, drive a lot of toy sales.
From 2014 to 2019, the global toy industry would grow by 15%. At about the same time, those major cable networks of Nickelodeon, Disney Channel, and Cartoon Network would lose half their total audience. 2017 also saw the bankruptcy of Toys R Us, as both parents and kids discovered and bought more toys online.
If you think about kids, they're usually the first adopters of a new medium. Kids weren't watching things like Nickelodeon as much as they used to. They were watching things on YouTube.
YouTube started in early 2005, and this was like the very early Web 2.0, this beginning of sort of like what at the time was known as user-generated content. Like web blogging was really big. MySpace was the biggest thing on the internet back then. There was an early video of a Brazilian soccer legend doing stunt tricks that just exploded on the site. One of the first viral videos. Lazy Sunday, if you remember that SNL short.
Oh, Jolly! Jolly bit me.
Do you remember those early viral hits?
YouTube in the early days was definitely comedy and music. It was a place of experimentation. I was the chief audience officer at Maker Studios. I oversaw essentially the creator partnerships all over the world.
Maker Studios was one of the largest multi-channel networks on YouTube and had partnered with some of the biggest YouTube channels at the time before being sold to Disney in 2014. Chris is now the CEO of Pocket Watch, which represents some of the largest kids stars on YouTube, including Ryan's World and Love Diana, who can amass over a couple billion views every month.
The truth is, one of the very biggest and earliest videos on all of YouTube was by a creator and star named iJustine, where she unboxed her first mobile phone bill for her brand new iPhone, and it came in a box. And this ultimately morphed into many different formats associated with unboxing, and tech was actually really big.
And those became fairly successful pretty early on the platform. And you saw them expand from tech products to beauty products. And then around 2012 and 2013, we saw this explosion into toys.
So here's the Furby inside right here.
We used to call them hands channels, okay? And a hands channel was literally a top-down view of someone's hands unboxing typically a toy. And they'd unbox it, they'd show each component.
We just got Uncle Scrooge.
I would speak to many of those creators. We signed many of those creators at Maker Studios to be our partners. And it was fascinating in that it was this whole new genre and this whole new format. And that corresponded with a rise of kids and family viewership on YouTube that was stark, that was hard to miss. And you would see it in the data. And we had access to a lot of data at Maker Studios around YouTube.
Let's see what's inside. First up, we have the Stormtrooper Pig.
You saw the launch of EvanTube, who I consider the first child, so to speak, unboxing star. And they would open toys, and kids were just mesmerized by it. They loved watching it. And next thing you know, you had literally 50 unboxings. They were unboxing just about every toy. It was, and people were just really excited. You open the toy, and you'd see a toy pop out, and kids just got excited seeing it piece by piece.
Yeah, he's in a bathrobe he's eating a lobster.
The early days of these unboxing videos, the videos were, from adults' perspective, just terrible. I mean, they were 10 minutes long, they were boring, there was a shaky camera, there was absolutely no production value. And if you think about these executives, they're trying to figure out how to reach this new audience, and they're brought these videos and say, well, look at this video. It has 200,000 views on it, and it's terrible.
When I first heard of it, I thought it was the weirdest thing. It just seemed kind of bizarre. Who would want to watch someone opening a toy, taking it out of the box? But then when I started thinking about this idea of exploration and discovery as a core play pattern, the most fundamental play pattern there is, it started to make sense. And I think that I have to say that the company that really jumped on that in the most concerted way was MGA with their launch of LOL.
Surprise! LOL Surprise had three key elements. Doll play, which is basically the most popular play pattern there is. Collectible, so within each LOL Surprise you'd get a little sheet that showed you all the other dolls you could collect. And then the surprise factor, you didn't know which doll you were getting. It was a blind pack, as they call it. And LOL was made by this company called MGA. Back then, 2016, they were a small player in the toy industry, founded by this guy named Isaac Larian. He's the CEO and founder.
I have 3 adult kids, and they were making fun of me that, oh, you're old, you don't know anything about what's happening in today's thing. And I said, like what? And they said, for example, there is, do you know about this iPhone unboxing videos that get millions and millions of views? So I thought they're pulling my leg, the children to make fun of their parents. And then I did go and look one night, and I was frankly shocked and flabbergasted that why would anybody buy an iPhone, take it home, and open the box and show it on the camera, and everybody will go and watch it? So I typed toy unboxing, and my God, I saw so many different videos and people, kids and adults, buying toys like an Apple and unboxing it and video and posting it. So that gave me an idea that why not come up with the ultimate, and that's the first LOL surprise.
All right. Oh, yes, we've got a gold ball.
LOL changed the way you open with toys, and everybody saw that. And the packaging became part of the play, which became part of the entertainment. So normally, if you get a package that you just open a package, you take the toy out, that's not exciting. You open up LOL, you peel it away, you open up inside, you have 7 surprises.
And it took off like wildfire and quickly became the top toy in the country.
By December of 2018, 8 of the top 10 toys sold were all LOL Surprise brand. And according to MGA, from 2016 to 2020, LOL would generate over $10 billion in retail sales worldwide.
LOL is bigger than Star Wars, it's bigger than Marvel, it's bigger than Barbie. These brands with huge advertising budgets are known basically by everyone. You don't have to, figure out what Marvel or Star Wars is. And LOL eclipsed them all.
In the toy world, blind bag or blind box toys have been growing in popularity. The most famous example in recent years is Pokemon cards, where you open packs in hopes of getting a Charizard, but more often wind up with something common like Blygar here. 2 years before the launch of LOL, in 2014, the Australian toy company Moose Toys launched a blind bag collectible called Shopkins. And in 2016, Spin Master would launch a more expensive blind box toy it called Hatchimals.
But the thing that sets LOL Surprise apart is that it mainly focused on YouTube. And not putting ads on YouTube, but working with creators and influencers to get their products in the hands of these kids doing the unboxing videos. For MGA, actually, the move towards YouTube was kind of a bit lucky and almost out of necessity.
In late 2015, Nickelodeon parent company Viacom would sue MGA for breach of contract after it failed to pay $3.5 million for the production of a TV series based on their La La Loopsy dolls.
They tried to flex their muscle, and they said, well, if you don't agree to our way of seeing things in the conflict that we had, a separate conflict, we are going to stop your advertisement of toys.
At the time, Nickelodeon was the #1 ranked children's network, and not to be able to advertise on Nickelodeon could have been a death knell. But MGA, necessity is the mother of invention, that caused them to lean into digital advertising far more than any big brand had ever done before, because they had to find a new way to reach kids.
The court would ultimately rule in favor of Viacom, both in LA federal court and on appeal in the Ninth Circuit. Larian blamed the court defeat on what he contends was judicial bias. Nickelodeon parent company Viacom didn't respond to a request for comment.
So that by itself forced us to go and say, okay, the hell with Nickelodeon, let's find another way to reach to children. And that's how we went and doubled up on YouTube especially, and the rest, as they say,
So early on, MGA partnered with YouTube creators with huge audiences like Cookie Swirl C.
Good morning, chocolatey chippy cookies. We are going to be spending the morning with this LOL surprise baby fancy.
They took it another step further. They actually helped kids learn how to do their own unboxing videos. They gave them, support and learning and tools. And so all these kids got to be kind of a little mini influencer themselves as they were unboxing their LOL products.
So just to give you a flavor of how popular these videos are, go onto YouTube and search LOL surprise, and you'll see videos with 1 million views, 10 million, 25 million, 50 million, and even 100 million. There's lots of them. And kids are watching these videos, and they're probably watching them over and over again.
The old way toy manufacturers would do things is they buy TV, which was about 90% of their ad spend, and then traditional PR, get on the big morning shows. It's an entirely different formula. It's much harder for toy companies right now because the formula is so complicated. You have to really take a deep dive into each platform. Am I promoting on Twitter? Am I promoting on Instagram? Am I promoting on TikTok? What am I doing on YouTube? You have to look at every possible social channel.
By 2017, big toy brands like Mattel had shifted nearly 50% of their marketing budget to social platform advertising. Brands would help seed videos of their toys, and if they were lucky, that could kick off a wave of creators making their own content around the product. In 2020 alone, Tubular Labs estimated that LOL-related content had amassed 5.1 billion views.
This idea of imitation. So when you see kids playing with product, it kind of excites the same neurons in your brain that happen when you do it yourself. The more we could show children having this experience, the more kids felt what it would be like to have it and then wanted to experience it themselves.
One of the criticisms of this whole influencer movement among kids is that kids are young. They don't understand what's necessarily an advertisement versus real content. And that's a big criticism of this industry, is that a lot of kids are getting on YouTube at young ages, not being supervised by their parents, and just watching these videos. And they don't realize that maybe that influencer is getting paid by the brand to do that video, or there's some other compensation. And that, blurs the lines for kids as they're sort of developing and figuring out how to consume media.
Questionable advertising concerns aside, kids' YouTube creators would take off. Channels like Ryan's World would grow to almost 30 million subscribers, and a whole industry formed around them.
When we first started working with influencers, they were very happy to work for free product. You give them the product and they do something for you. Then gradually influencers got smarter and started charging for their services as they started building a following. Now, because it is such a big business, the dollars can be significant investing in big influencers. When Spin Master launched one of its new TV series and associated product, we made it a point to buy an advertising package with Ryan's World to ensure that we could get really quick, big reach right away.
This is an advertisement for Spin Master.
So from these unboxing videos, the content's gotten a lot more sophisticated. They're creating narratives around the toys with voices and meta-universes, if you will. And it's really engaging content, even more so than the original unboxing videos for these kids. And the content's coming out maybe once a week or even daily. So if you think about it, what they've done is they've created basically like a TV show around a toy. It's not unlike what we saw back in the 80s, which was criticized back then, by the way, when you had toys like G.I. Joe turned into an animated series, or Masters of the Universe, or Transformers. So we've kind of seen this full circle now, right? So back to where we were, content and basically mini television shows created around toys on YouTube.
Kids' content on YouTube is likely to face increased regulation in the coming years. In 2019, the company would agree on a $170 million settlement with the FTC for serving ads based on personal data to kids on YouTube. YouTube would put more emphasis behind its made-for-kids platform, YouTube Kids, and each video uploaded to YouTube must be flagged as either made for kids or not. In a statement outlining changes to the site, YouTube would say that responsibility is our #1 priority at YouTube, and this includes protecting kids and their privacy. Still, the site is far less regulated than traditional television.
I do think parents have a better understanding of YouTube now and the new genres and formats there that they didn't prior. And they now notice things like their kid isn't watching a toy unboxing that's a commercial for a toy. Their kid is watching other kids play with toys in an imaginative way, which inspires them to go play with things in the real world in an imaginative way.
In just a few short years, YouTube had caused a transfer of power from toy and network executives to 9-year-olds and their families. The Kaji family may have started out as toy reviewers, but now Ryan has launched his own line of toys, a cartoon series. He was even a blimp in the 2020 Macy's Thanksgiving Parade.
You or I might think about Spider-Man or Snoopy, But today's kids see that blimp of Ryan and they relate to him. He's the character they want to grow up with. He's the character that they want to engage with. And as we go forward, these influencers are becoming more and more like big, giant global brands. And that has profound effects for entertainment going forward.
Airbnb is huge today. On any given night, you could have as many as 2 million people staying in an Airbnb all around the world.
You know, our mission is that everyone can belong anywhere.
We're talking, 300 million stays on any average year, and there's tyranny in numbers. The vast majority of Airbnb stays don't result in a safety incident, but sometimes things go wrong. And for Airbnb, we're talking thousands of safety incidents that occur every year that the company has to handle and has to respond to. I'm talking situations like kidnappings, hostage cases. We're talking murder, we're talking rape, we're talking, the worst violent crimes that occur in our society happen inside Airbnbs. Airbnb never wants these kinds of cases to end up in the headlines. That's really bad for their brand, their reputation, and their public image, particularly because this is a business that's based on strangers trusting one another. So when crimes like this occur, that kind of threatens their entire business model. I'm Olivia Carville. I'm a reporter on Bloomberg's technology team, and I've been covering online travel companies like Airbnb for the last 2 years. Airbnb is a startup that's based in Silicon Valley, and like many of the sharing economy startups, it managed to grow so big so fast by essentially skirting regulations. It was based on that premise of move fast and break things, and it wanted to work against regulations in order to grow as big as possible and win the popular vote, because it became so popular so fast that cities could no longer control it.
On a peak night this past August, we had 1 million people from around the world, coming from 180 countries in a single night, staying in an Airbnb home.
The vast majority of Airbnb stays, we're talking 2 million people staying in an Airbnb on any given night, don't result in a safety incident. But sometimes things go wrong. And for the company, it was dealing with these cases was a really challenging, difficult, complicated area. You had hosts and guests, and sometimes they disagreed on what happened. You had regulatory issues in some of their biggest cities. Then you also had the growth of the platform and the fact that if you're going to try and prevent some of these incidents, it could cut into revenue and cut into the number of listings that you have. So for Airbnb, it was about trying to figure out the best way to handle these crises in a way that's going to not only protect the individual in crisis, but also protect the company's public image, its brand, its reputation, which is essentially what its business is based upon. As Airbnb grew, way too big for them to be able to take all these calls alone, they developed a team of 100 highly specialized agents that handle the worst of the worst cases. Over the course of my reporting, I've talked to almost 50 former employees at Airbnb, and 7 or 8 of those work directly on this elite unit. These safety agents, many of them come from military backgrounds or trauma backgrounds. They're trained to handle traumatic situations and to try and help people who are going through what may be the worst day in their lives. For these safety agents, a lot of them understood that they had a dual role. First and foremost, they wanted to protect the user in crisis, but they also knew they had a responsibility to protect the company's brand and public image.
I mean, everything about housing in New York is a total mess, and it's always chaotic. It's not too surprising that Airbnb's biggest battle has broken out here. 2015 was a really challenging year for Airbnb.
Airbnb's listings between 2010 and 2014 were essentially illegal hotels.
The company was 7 years old now. It had grown huge. It was now a household name. But by growing that big that fast, they also came up against, a pushback in regulations.
Now, Airbnb's under attack in a lot of major cities.
So what are they saying about this? I mean,
they can't give up on New York because New York's too important for every kind of reason.
They knew that they couldn't lose the battle in New York because it was one of their biggest markets, and also it could result in a domino effect. If other cities around America saw New York City either backing down on regulations or enforcing stricter regulations, that could in turn be rolled out right across the country.
I think it's going to be awkward when they have to, put in their prospectus their risk factors, when they have to say, well, one risk is that the whole thing might be somewhat illegal in our biggest market.
And in December of that year, a young woman from Australia flew into New York and stayed in an Airbnb with a group of her friends. They picked up a key from the local corner bodega without even needing identification. The police report said this 29-year-old woman left her friends at a midtown bar and returned to the Airbnb on her own. She thought that she was alone, but she wasn't. There was a man inside the apartment, hiding in the shadows, with a kitchen knife. He grabbed her, dragged her into a room, and raped her. He later fled. About an hour after this attack, he came back, and police were in the apartment at the time. They opened his backpack and found 3 items of interest: a kitchen knife, one of the woman's earrings, and a set of keys to the Airbnb. This case was a really complicated one for Airbnb, partly because it occurred in New York City, where they were fighting this really tough battle with city officials over regulations, and partly because the alleged rapist had the keys and he was inside the apartment. That meant that Airbnb needed to do what it could to protect itself. They wanted to find out, how did he get the keys? That was a really big question for them. They launched an investigation to find that out. But before they did anything like that, before they thought to kind of protect their own reputation here, they really focused on doing what they could to help this young woman. They paid for her to move to a hotel. They paid for her mother to fly in from Australia. They paid for both of them to fly home. They offered to cover any health or counselling costs that she might need later. But inside the company, internally, they also launched an investigation. They wanted to know, how did the alleged rapist get the keys? How did he get inside that Airbnb? And when they found out that the keys had been left at the corner bodega, that then created, a problem of liability for Airbnb. They didn't have a policy around key exchange. They didn't tell their hosts how they did or didn't have to hand keys over to guests as they were arriving. So for Airbnb, they also, they wanted to know what was going to be said in court. They wanted to know if any media were going to pick up on this story. And they wanted to know what their legal liability potentially could be. A week later, the alleged rapist was indicted in the Supreme Court in New York, and Airbnb sent a staff member to find out if the company was going to be mentioned in any of the court records. And it wasn't. It wasn't mentioned in the police report, it wasn't mentioned by prosecutors. There's no mention of Airbnb really in any public record. This case has never been reported until now. And, for Airbnb, that was kind of lucky. This case never landed in the media. And, 18 months later, when this woman's lawyer reached out to the company, they signed a settlement for $7 million. And part of that settlement, there's a clause that says she cannot assert or imply responsibility on the part of the company. We've spoken to legal experts who indicate that what this really did is gag the woman from saying, "I blame Airbnb." Airbnb is one of the few companies in the world that has this online, offline kind of hybrid situation where you have users who meet online and then actually meet in the offline world and stay under the same roof. And that means that the company, at the end of the day, really has to take more responsibility than other social media platforms might do. With Airbnb's terms of service, that really means that whenever there's a dispute between hosts and guests and the company, this is all handled behind closed doors in arbitration. Most of these cases don't even make it to the courtroom. And when they do, the company will settle them so it doesn't go on through the courts. And what that means is that there hasn't really been a legal precedent that's set to determine what Airbnb's liability is here. Is it really responsible for when things go wrong inside its listings? What I learned over the course of my reporting is that this is anything but simple. This is a complicated, nuanced area. There are difficult trade-offs here. The company also has to have hard, tough conversations about policy. Airbnb's business model is based on strangers trusting one another. We often hear from the founders and the chief executive himself saying trust is their #1 priority. I've actually heard Brian Chesky, the chief executive of Airbnb, talking about how he didn't build a website or a platform that allows people to stay in each other's homes. What he built was a community that trusts one another. And when that premise is undercut, Airbnb's entire business model is under threat.
Earth view. Sounds far-fetched at the moment, doesn't it? But we may be seeing ads like this in the not-too-distant future.
Living away from Earth has always captured our imagination. As well as providing basics for survival, these ideas are a symbol of humankind's unique creativity and ambition.
This advanced base, or space station, will be headquarters for the final ascent to the moon.
Today, the idea of multiple outposts where we can live and work in space has never seemed closer.
We're gonna fly. It's about making our lives the best we can make it. It's about, as a species, having a path for our future.
And the mission to create these habitats is well underway as private companies get ready to take that next giant leap. The International Space Station. It's the only space habitat we have.
one of the first places they take you in the ISS is the cupola. So you can finally look at the Earth in all its beauty. And I don't care who you are, it's always stunning, it's shocking, it's amazing, because that's the view you've been waiting for your entire life.
It passes over 90% of the world's population without most of us ever realizing. And at an estimated cost of $150 billion, it's the most expensive object we've ever built.
You think about like the Sistine Chapel, the pyramids, and the Burj Khalifa, or take your pick. I mean, it far outstrips those. It's the one and only non-terrestrial human outpost. We've had a constant human footprint in orbit for almost 20 years because of the International Space Station.
The collaboration between 15 countries started construction in 1998 and was pieced together in space over the course of a decade. Since 2000, it's been a permanently crewed research laboratory, a space habitat that's allowed humankind to live, manufacture, and explore beyond Earth.
The overarching achievement of the space station has been education. It has educated us about how to do research, it's educated us about how to live, it's educated us about the harshness of the environment that it is in, and it's about learning, I think.
People say what was one of your favorite parts about being up there? Hands down, floating everywhere I went. But your first impressions for ISS certainly is, it's how big it is.
The ISS is the size of an American football field, with most of that footprint taken up by 8 solar arrays. These provide enough energy to power 40 homes. The station has an American side and a Russian side, as well as contributions from other nations like Canada, Japan, and the European Union. Astronauts on board can pass freely between these sections. Their living and working areas are made up of modules, each 4.2 meters in diameter, and in total, they have the same volume as a Boeing 747. The 3 main labs, Destiny, Hope and Columbus, are conducting up to 600 ongoing experiments at any one time. And while it's been a collaboration between governments to build and maintain the ISS, its next chapter will rely more on private enterprise.
Today is a very remarkable day. NASA is opening the International Space Station to commercial opportunities and marketing these opportunities as we've never done before.
Managing and maintaining the ISS costs $3.4 billion a year. That's over half NASA's space operations budget. Aging hardware and space debris will only add to these costs, which is why NASA is now hoping to pass some responsibility for the station over to commercial companies.
We would like to see a robust commercial marketplace in low Earth orbit where space stations exist outside of NASA. The goal being that NASA could be a customer, and we want to have numerous providers that are competing against each other on cost and innovation.
With federal funding proposed to stop in 2025, opening the station to private enterprise would free up resources for the space agency's ambitions to return to the moon and journey to Mars.
Transferring to a more commercial model is allowing industry to take over many of those areas that NASA has traditionally been responsible for, like the design and operations and maintenance of space systems. But the most exciting part, I think, is new opportunities. The iPhones would have never come from the government, for instance. The base technology came from the government, but the way it's used, the way it interacts with consumers, governments aren't really built for that. So I think that'll be exciting to see how private industry uses the same technology or the same systems, but then use them in a different way.
Every NASA achievement has been the collaborative achievement of NASA and industry. What's going on right now that's a little bit different is NASA is turning to companies not to direct them what to do, but it's turning to companies to build relationships with them because those companies are attracting investment from non-space sources and are bringing a different kind of innovation to the table.
In the shadow of NASA's sprawling Johnson Space Center, the headquarters of startup Axiom Space might seem a little modest, but their goal is big, to build the first commercial space station. Led by a former ISS program manager, the team has been involved in every mission to the station since its inception.
We know it has to be much lower cost to operate on orbit than ISS is today, so this is key to continuing the heritage of ISS, is to start there so we can evolve everybody to the next platform. I liken this to the internet. So the internet was created, and we got very excited, and any kid with a good idea and just the basic programming skills could go build a program to do something. We have huge companies that grew out of that, and still today there's new ideas, new things being built. The thing about a microgravity environment is it's limitless. It's like the data we have access to on the internet. It is limitless. And it is not immediately obvious to us, all the benefits that that's going to entail, but over time it will become very, very obvious.
By 2024, Axiom plans to send a central node to attach to the ISS. That will make up the core of their new station. This will be followed by crew quarters for 16 people and research and manufacturing modules. When the ISS is retired, this will break away, and additional modules with a lifespan of 30 years will be added and swapped out as they age, using a robotic arm. And they're hoping to do all of this for 1/50th the cost of the ISS.
I mean, when you talk about our vision, it sounds really simple. It really is about driving the thought process and the cost down so that anybody that wants to take advantage of our place in orbit and a microgravity environment can do so. And that's really it.
Okay, Elon, I need to go towards my seat.
The International Space Station is a fantastic vehicle, but one of the big things is they have quite a few major components outside, which means you have to do an EVA, a spacewalk, to go fix it. A spacewalk on a good day is 100 hours of crew time to get ready and actually go do the spacewalk. So we're able to take advantage of the reduced size of components. And so our design is going to have all of the components are going to be in the pressurized environment. So we know what the basics are, you know, water, food, clothing, life support, and we know how to handle those. But now the next step is how do we make it more intuitive? And we want to now take advantage of the technologies and the capabilities we have today to build more luxury into the experience. The objective is to make the environment the background for all the users. You're every day doing whatever you want to do on orbit, research, manufacturing, looking out the window, whatever you're there to do, we want you to be able to do that, not even think about the environment. And it's because of our experience on ISS and what the team brings to Axiom Space, we're able to build that environment. You won't worry about that.
3, 2, 1, release, release, release.
Fire, fire.
Like Virgin Galactic and Blue Origin, Axiom is hoping to attract space tourists with tickets starting at $55 million for a 10-day mission. But that's just one part of the commercial space station market that they think could be worth $37 billion over the next decade.
Our first commercial customers are countries who have astronauts in space and want to expand their activity in space, and countries who do not yet have a human spaceflight program who want to send people up. And we've now got both research and manufacturing companies who want to do work with us while we're at the International Space Station and on our platform after it separates from ISS. Human spaceflight is particularly exciting because it's that slice of space that is really nascent. It hasn't undergone the crowding that satellites have had. It hasn't already had that explosive growth. It's really ready for that now. The first thing I'm really looking forward to seeing happen is the face of our first astronauts on orbit looking back down on us and knowing that we had a hand in sending that person to space. And ultimately, the separation of ISS when it's ready to be retired and deorbited, and then we continue in space independently. For me, that is a stepping off moment for humanity. It's almost like when Neil Armstrong put that first boot on the moon. This will be the first time that we've gone from a platform of learning how to live in space to building our permanent home in space.
Other private companies also want to use the ISS as the starting point for their own ventures. Bigelow Aerospace already has one of its inflatable structures attached to the station, and others, including Sierra Nevada and NanoRacks, have put forward proposals.
Space habitats are expensive. I think it's a false dichotomy to say, okay, we're done with the International Space Station, let's move on to commercial platforms. What I think is much more likely and realistic, and what NASA is certainly driving toward, is an incremental transition where commercial platforms attach to the space station or work collaboratively with the space station. The next chapter cannot occur without the active engagement of companies. That said, that active engagement might not be as customers, might not be as drivers, it might be in service of government mission objectives.
We will return American astronauts to the moon, not only to leave behind footprints and flags, but to build the foundation we need to send Americans to Mars and beyond.
This proposed mission, along with SpaceX's own ambition to reach a red planet, has opened up a longer-term market, and some companies are already thinking beyond orbiting habitats like space stations to actually building on the surface of other planets.
I was working in a firm designing skyscrapers, and I saw Elon, and he landed his Falcon 9 rocket in the middle of the ocean, and that for me was a trigger. I thought, wow, this could actually happen, and it's always been my dream to put a building on the moon or Mars. And if he's going at the pace he's going, it could definitely happen within my lifetime, and I want to be the one to build it.
In this warehouse, alongside startups from across the US, architecture firm AI Space Factory are refining the production of Marsha, a 4-story structure they created for a NASA competition to design the next generation of space habitats on Mars.
When we started designing our Mars habitat Marsha, I think we looked at everything that had been done already and kind of tossed that aside. But what we were given was a set of guidelines from NASA. They think the best way to build a habitat on Mars or the moon is to use what they call in situ resource utilization. So use the materials that are there. If you've seen sci-fi movies, you might see like glass and steel domes on distant planets, but the reality is to ship that kind of material to the moon or Mars would be so exorbitantly expensive you would never be able to build in the first place. So the idea is to send a 3D printing robot, which can then harvest the materials you find on the site and build with that.
The reusable print material is a mix of biopolymer made from recycled plastic or plants like corn and sugarcane, and basalt, a rock found on Mars and Earth.
It's the rock that gives us its incredible strength. We've tested this material. It's 3 times as strong as concrete in compression, and it actually has what we call a tensile capacity. It can prevent itself from being pulled apart, which is something concrete's not very good at. You need to think at all times how do you optimize the amount of material that you use, and that's also why this thing is shaped like an egg. And if you think of an egg, it's a very structurally optimized form. It's very, very thin, but it provides the strength that the egg needs, and that's why this is shaped the way that it is.
The egg shape, as well as the nested shell structure, also accommodates for extreme differences in pressure and temperature on the surface of Mars. But more research still needs to be done to find out how print materials could be gathered and how 3D printing would work in a unique environment of space.
You're dealing with a completely different set of physics and environments, which is very harsh. The cold, the low gravity, the vacuum of space, and finding solutions for how to build there or do anything in space just requires a high degree of innovation. There's no such thing as brute force when it comes to space. Like, you need to think about the problem, find a very elegant, lightweight, cost-effective solution. The next challenge is really going to places on Earth, literally taking the dirt that we're finding on a site and beginning to print with the dirt. We have to perfect this technology on Earth, and then we go prove it out on the moon, and then finally onto Mars.
The first customers could include NASA and companies like SpaceX, who would lease out these structures for individual missions. But before that, AI Space Factory hoped their technology could be monetized as well as transformational here on Earth.
The challenges of building on Mars forced us to kind of make this jump in construction technology, which we can now apply on Earth, to build more sustainably. So rather than building with steel and concrete, which are these manufactured, very energy-intensive materials, to go to a site, have a solar-powered array that would then allow our 3D printer to print in the most sustainable way possible. And we never would have found these ways if it wasn't for the challenge of building in space.
3, 2,
1. Ignition and liftoff of the Falcon 9 to the space station on the first commercial launch from Kennedy Space Center's historic Pad 39A.
Humans have now been consistently living and working in space for more than 15 years. And if we want to keep that up, what do habitats need to look like? And frankly, they can be large or they can be small. But the future of space habitats really, to me, comes down to the ability to persistently maintain human presence. Whether that's a few people or many people. That seems to be the dividing line between where we were before and where we want to be in the future.
We have to learn how to benefit from what we do on orbit and bring those natural benefits back home so we help ourselves out on the ground while we also learn to live somewhere else. And it really, at the very deepest level, is about survival of our species. So I get pretty excited when I spend a few moments thinking about what we're off to go do, because this really is the first step to learning to live off the planet.
That first step is just the start of our journey to create a lasting legacy in space. While commercial companies may be stepping in to imagine what these new space habitats look like, it's what's happening inside of them that may unlock the future of space industrialization. On the next episode of Giant Leap, we'll visit the private companies who are looking to build their business around manufacturing in space. Using the unique properties of microgravity, they plan to create new materials with extraordinary qualities that can't be replicated on Earth, including new manufacturing techniques that could change how we build large structures in space and even unlock the ability to 3D print full human organs. But before low Earth orbit can become a new industrial center, we're going to need to take another giant leap.
This is how it used to work. A real estate agent would lock in the client, they'd stage the place, hold an open house every single weekend, and hope that the right buyer walks through that door.
10 years ago, you could probably go look at a house and circle back 2 to 3 weeks later and still have an opportunity to make a bid. The first time I received a lead through Instagram, my mind was blown. If you're seeing something in a neighborhood that is established, you have 2 to 3 days after the open house in this market to make an offer.
Our world has shifted so much. Folks are getting comfortable doing business either through social media or 100% virtual.
Social media, like everything else it touches, has turned the real estate business upside down. You've heard this trope before. Millennials aren't buying and owning as much as their parents' generation, be it a car, a diamond, or a home. But the lack of ownership is not always by choice. In 2018, a survey found that 89% of millennial Americans want to buy a home. They just can't afford it. As of 2019, millennials of all stripes owned only 5% of U.S. housing, compared with 15% for Gen Xers.
Millennials haven't been able to make these big ticket purchases the same way as their predecessors did. Now, this is down to the financial crisis. We have rising student loan debt and a higher cost of living. Now, millennials are getting older. They're earning more money and saving more. So now is about the time where a lot of them are going out and making those purchases.
And now, having been stuck at home for over a year, the same generation that embraced Ubers and Airbnbs wants something to call their own.
I got married and I have a child, so, looking for more space and thought about the conventional route of young and single and live in the city and then move out to the suburbs when you have a kid and a wife. I've seen a whole bunch of my friends just move on down to the West Palm Beach, Miami area, Austin, Texas. So they are certainly moving out of the city, but space was top of mind for them moving out.
We lived in Williamsburg for about 16 plus years, and week 2 in the pandemic, we just realized we needed more. So we started looking for a house right away. We now live in Goshen, New York, which is about an hour and a half from New York City.
Instagram accounts like Circa Houses and Cheap Old Houses offer a glimpse into the perfect suburban life, often at a price point not too dissimilar to what adults pay for rent in major cities. By the end of 2020, New Yorkers who didn't flee paid an average of $2,700 a month for an apartment, even as rent prices plummeted during the pandemic.
Millennials make a large percentage of spending right now, and that makes them a valuable consumer for brands. That means they're being courted by everyone out there to spend with them. They grew up online. They're comfortable with pretty much anything that you can do there. And that's buying things, selling things, Craigslist, eBay, all that. Making a $100 purchase on Craigslist or a $1,000 purchase on eBay, it's not that much of a leap to go even further if you're buying a fancy piece of jewelry or a house for $1 million.
The uptick in home demand fueled by the pandemic, combined with record low interest rates, has made home buying extremely competitive over the last year. So much so that some millennials look to social media to shop and actually buy their first house sight unseen.
I saw sort of something on my Instagram feed and, clicked, and we ended up seeing this house. Houses weren't really being shown at that time because we were in full lockdown. We became really interested. 1 YouTube video, 20 Zillow photos, that is it.
The red-hot housing market spells opportunities for developers targeting this demographic, getting eyeballs strictly through social media.
People are not looking in the back section of the Times anymore for real estate listings. Our demographic is between late 20s to mid 40s, and that demographic is spending a lot of time on social media, and they're doing a lot of shopping via Instagram and other social media platforms.
This is Joshua Gelb and Pele Hamburger. During the pandemic, the two New York City-based developers started Neville House, a new construction project 2 hours north of the city. Unlike most traditional real estate listings, the pair bypassed the use of a broker and advertised their homes directly on Instagram. No fees, no commissions.
You used to have to hire a broker, work with them, they would do showings on site. Now you basically put your renderings on Instagram, and within an hour you have 15, 20 replies saying, can I come see it directly with you, and let's see it tomorrow, and it's just completely changed the game.
Most people have that image in their head of the quintessential upstate modern cabin set in the woods. We've definitely tried to tap into that and create something that's attainable for these people. Say, you can have that. You can be swiping through Instagram and that can be your home too.
There's been quite a proliferation of these direct-to-consumer brands. There's just tons of them out there. It's not that hard to start up a website that sells things and get things manufactured for that e-commerce platform. So like Allbirds with shoes, Casper with mattresses, or Warby Parker with glasses. All of that means a lot more opportunity for brands in the online shopping space. So it's natural that real estate would want to get involved as well with these big-ticket items.
10 years ago, the broker would drive the search. Now, I think that my clients text me listings, they have alerts, they find things quicker than we do sometimes because we're out and about. I'd say that the buyer is much more involved these days.
Social selling is creating brand new ways to shop. So let's look at vintage clothing, for example. There are sellers on Instagram finding successful ways to sell one-of-a-kind items. It's that fleeting nature, the ephemeral nature of social media. You post the item online, and whoever's first gets that one-of-a-kind item. Now, real estate has similar scarcity to it. There's one place to buy. It's one home, one apartment, one thing. It's one of a kind.
But the rise in social media real estate isn't just about the instant gratification. Researcher Andre Perry, who studies economic inclusion at the Brookings Institute, says social media has evolved from the days of online hangout spaces and mood boards to a powerful change agent.
Social media is a primary source to get news and information, but it's not just about social media, it's about the movement that we're in. The racial justice uprising really gave people a sense of worth and empowerment. And so people not only are getting information about what protects people in the long run from economic shocks, things like wealth.
In his research, Andre found that not only are more millennials buying homes during the pandemic, the rate of home ownership among black millennials are at historic highs.
The fastest way to accumulate wealth in this country traditionally has been through home ownership. Millennials in particular are saying, hey, I want protection. I want to live longer. I want my education to go further. Let me acquire wealth. And the fastest way to do that is through home ownership. When the pandemic hit, many of the amenities or the comforts that came along with those living conditions were gone. Folks couldn't go to bars and fancy shops. And so you saw, instead of people going out and buying clothes, they saved their money and bought property and outside of the city generally. People are moving to the suburbs, to rural areas, places where home prices are a little bit cheaper.
Many home buyers are looking for houses outside the major metropolitan areas. Additionally, many home buyers are looking for direct outdoor access and added space as the uncertainty about the virus persists.
Millennials are also looking to influencers not just for the latest trends and TikTok dances, but to partake in important conversations, be it about politics or personal finance or anything in between.
Real estate ownership. Let's start small. Let's don't be scared to start small. Instead of renting a big house in the hills in California like most artists do, buy you one that's on the flat.
I meet folks like Brandon Rule and Charlemagne the God.
So you have residential real estate and you have commercial real estate.
They're talking about buying homes. When I was coming up, really home buying was a mysterious, shrouded process that only a few people could teach me. Now I can easily log on to Clubhouse or Instagram and find literally lessons on how to purchase a home, but done with savvy and finesse.
Today we're going to make a greenhouse.
I am DIYing the entire closet.
Heather, having bought her fixer-upper sight unseen, also looked to internet personalities to help figure out how to modernize and to make sure her home was also an investment.
It gave us a lot of confidence. They make it look super easy, how we could do all of those things ourselves. My husband just installed a laundry chute, which is something we never would have thought of if we didn't see an influencer do that and how easy it actually is.
Really simple do-it-yourself project. You can do that. If you have any questions, go ahead and message me.
And in the case of Neville House, Josh and Pele hope that buyers see these homes as potential secondary income.
These young families look at these products or look at our homes and say, here's a turnkey Airbnb. This can serve our family, but this can also be the perfect rental. We've tried to strike a balance in the design of the home for, working well as a family home that's going to be lived in and also working as an investment.
A lot of this just points to how millennials can utilize and leverage social media to their benefit. But it also speaks to, again, this moment that folks want freedom. So millennials are really stepping up to this real estate game and taking ownership and building wealth.
Of course, not everything is as it seems online. While social media can be a useful tool for learning, there's still a lot it can't tell you about the home buying experience, or living in the suburbs for that matter.
We knew going into it, budgeting for a lot of renovations, we kind of thought if we buy it at $450,000, we could put $200,000-300,000 into the house and really make it ours and our own. I can't wait to replace in this kitchen and update our built-in deep fryer, which was not in the listing photos. We kind of got into the house and we realized that budget was completely unrealistic.
We have a lot of people who see our design on Instagram and they say, I love it, can you come build this on my property? And then they'll send us the lot, which they bought sight unseen during COVID, and because of site conditions or zoning, it's virtually unbuildable.
I think we all know that what you see on Instagram and what you see in real life are two very different things. So while we can definitely, as brokers, create these fantastic narratives, the one recommendation that I would give is do your homework. Don't believe everything you say. That's not to say that there's dishonesty or anything where people are trying to manipulate you, but not everything you see is accurate.
This shift towards social media house hunting may also help to bring equilibrium to a market that has historically disadvantaged specific groups of buyers.
Many of the traditional ways that people got mortgages or loans often precluded Black people because they deemed us too risky for those loans. With technology, there's ways to get around that. As long as more Black people get educated on racism and discrimination in lending, we're going to figure out ways to get around that racism.
When I was 24 years old, I saw the UFC on a pay-per-view on TV, and I was so overwhelmed by the athleticism, the skill. And then at the end of the fight, the combatants hugged, they shook hands, and I just fell in love with it.
Part of UFC's appeal is it doesn't look like a athletic display of martial talent and mastery as much as it looks like a bar fight.
We choose to do this because we love the sport, but it is a business. And if you do not treat it like a business, I guarantee you that the promoter is, and you will be left broken at the end of your career.
Each of us have an individual story, but as with anything, you take enough of these individual stories and you see not only crossover, but intersectionality.
A group of former UFC fighters that are suing the UFC scored a key legal victory on Thursday when a federal judge said he would grant their lawsuit class action status.
There have been fights in every major U.S. sport about workers' power in the labor market.
I don't think there's a guy in the sport, from the guy who just got his first fight all the way up to the Conor McGregors, that is pleased with the way the UFC treats fighters. The way we've been strong-armed, the way we've been coerced.
Fights over unionization in some sports, fights over free agency in baseball, and in boxing, the Muhammad Ali Act, which restricts the kinds of contract terms that can be imposed on boxers. The fighters who brought this lawsuit see it as the continuation of a tradition in sports, of athletes fighting to have agency and power in the terms of their work and who they do it for. Mixed martial arts used to be pretty culturally and legally fringe in the United States. It was banned by most states. John McCain had famously called it human cockfighting. There are some rules in the UFC, but to a large extent, all sorts of body parts and tactics and attacks are on the table, and people get seriously injured at times.
My nose has been broken multiple times.
I had my right pectoral torn off, had to get that reattached.
I've had my jaw broken in 2 places. I've had my neck broken.
Had my left ankle broken, had to get that repaired.
I've had torn right labrum in my shoulder.
He broke my eyeball, the bone that holds up my eyeball.
I've had my left eye orbital fracture twice where my eye caved in.
I was swallowing my own blood, and I knew, don't blow your nose or both eyes will blow.
At the time that UFC was bought for just $2 million by the former boxing coach, Dana White, and a casino owner he'd been friends with, Lorenzo Fertitta, and his brother Frank Fertitta, UFC was struggling, as were other mixed martial arts promoters. It was pretty much a fixer-upper. The money that they spent to actually purchase it for $2 million was much less than the money they quickly had to sink into it in order to revitalize it. They pulled off a multi-pronged strategy that was quite successful. First, they did what White has referred to as running towards regulation. They found ways to make compromises with state regulators so that the sport would not be illegal. And at the same time, they also popularized it. They made gambles like paying the production costs themselves for the first season of a reality TV show, The Ultimate Fighter, on Spike TV. UFC under Dana White had a gift for weaving compelling personal narratives and rivalry. People throwing shoes, a guy coming to the octagon with Who Let the Dogs Out playing while he was dragging another guy on a leash.
My first contract with the UFC is kind of an interesting story because here I am on this reality show, The Ultimate Fighter, and they started to realize how big of a stepping stone this was going to be for the UFC. Sat us all down individually, put a contract in front of us and said, hey, we realize that this is going to be huge and we really want to have you all a part of the UFC family moving forward. So we want to go ahead and get this out of the way, just sign this simple contract and we'll be able to move forward as one unit. But as I'm looking at this thick contract and wondering what I should do, Dana White looks at me and says, don't worry, if this thing takes off, we'll take care of you.
The fighters would say, at the heart of UFC's power is the contracts that it signs with fighters.
Before boxing had competition, boxing used to be dominated by a few dominant promoters, and the contracts were ported over from boxing. And the contracts are basically designed to control every aspect of a fighter's career. They're long-term. They last multiple fights.
Fighters, under these contracts, are bound to fight only for UFC for a period of time, and UFC can extend that time if a fighter declines a match or if a fighter gets injured.
They control who the fighter fights, they control when the fighter fights, and then they have a number of different clauses that make it very difficult for a fighter to ever break free from the UFC if that fighter ever did want to become a free agent.
Contracts are so one-sided, there really is no negotiation room for any of the things, especially as you're coming up and as their stranglehold on the sport of MMA got so much stronger.
Part of what's at the heart of this lawsuit is the ways that UFC successfully took other competitors off the board.
The UFC had such a stranglehold on mixed martial arts, and as they were buying up so much of the competition, shutting them all down, they really became the only option for anybody that wanted to do this professionally.
If you follow Dana White's Twitter or watch him on YouTube, you could have seen Dana White calling himself the Grim Reaper and bragging about how he has defeated or derailed or acquired one after another company that tried to compete with the UFC. In 2011, UFC acquired Strikeforce, which at the time was the most prominent rival still standing.
Kung Lee is unbelievable. It was a great fight. Let's hear it for it one more time. Scott Smith and Kung Lee.
The CEO of Strikeforce, Scott Coker, has said in the past that he saw himself like Luke Skywalker up against the Death Star trying to compete with UFC.
Eventually, when Strikeforce was bought out by UFC, my only option was go to UFC because they had the rest of my contract. Now I'm under a contract where it's only an 18-month contract with 6 fights, but 5 years later, I'm still stuck in the contract.
The month before UFC's parent company, Zuffa, completed its acquisition of Strikeforce, a UFC executive sent an email, and the subject line of that email was, "We own MMA."
And the UFC has admitted in documents that have now become public that they've almost never lost a fighter that they wanted to keep.
In internal UFC emails, we now know the company referred to what it was doing as choking off oxygen to the competition. The most important oxygen that UFC allegedly ran afoul of the law by cutting off to its competitors is the fighters themselves.
And not only did they make it clear to us, they made it clear to the whole mixed martial arts world, there is no negotiating.
These are very strict, never-ending contracts, and that's the case to this day. The UFC just says, oh, you want to fight for us, you sign here. If you don't want to, we've got 20 other guys that'll take your spot.
They have 70, 80, 90% of the top fighters under exclusive contract, meaning that those fighters are not available to any other MMA promoter.
And fighters, even if they wiggled their way out of the very restrictive contracts that UFC imposed on them, didn't have another professional mixed martial arts option because there weren't robust rivals to go sell their work to.
On Tuesday afternoon, a class action lawsuit was filed in U.S. District Court in San Jose against Zuffa LLC with fighters Kung Lee, Nate Quarry, and John Fitch attached to the suit.
Rampage Jackson came to me and says, "Hey Kung, I know this lawyer. He will help get some fairness for the fighters, in the marketplace." And I decided I wanted to step up for all the fighters that's being affected.
At the end of 2014, more than 6 years ago now, a group of now all former fighters filed an antitrust class action lawsuit against UFC.
And in broad terms, the case is an antitrust case where we're claiming that the UFC is both a monopoly and a monopsony.
Usually, when we talk about monopoly, we're talking about the power that a company has when it becomes the only one selling something. Monopsony is about the power of being a monopoly purchaser of something, and particularly a monopoly purchaser of labor. A key argument in this lawsuit has been about, as UFC succeeds and its revenue soars, how much should we expect that, absent illegal conduct, the fighters' pay would soar as well. In UFC, year after year, the share of the company's revenue that goes to actually paying the workers doing the fighting has hovered around or below 20%.
And what this analysis shows through complex statistical regression modeling is that if the UFC was competitive and did not allegedly violate the antitrust laws, it would pay its fighters 50% or more of the revenues it's generated, just like baseball, just like hockey, just like basketball, boxing. If instead of paying 20% of the revenues generated, it paid 50% or more of the revenues generated, the fighters would have made $1.6 billion more during the period that we measured, 2010 to 2017.
Sometimes when you write about allegations against companies, and particularly about lawsuits against companies, those companies don't want to say a whole lot about them or are pretty dismissive of the significance of litigation against them. UFC, in their comments to me, has been pretty feisty about this, saying that they see this lawsuit actually as a threat to the ability of businesses to take risks and succeed, and that they don't want to roll over, that they want to fight it and they want to defeat it. The fighters I talked to described having side jobs, being reliant on UFC in part because after taxes and expenses, they weren't making enough money to feel financially secure.
The overview of my career from a financial perspective is, something I've had a challenge in admitting. I can tell you now that I lived in my mom's detached garage the entire time I was fighting, and I had a second job as a bouncer and a bartender, a third job as a personal trainer, just to make ends meet.
Nate Quarry told me that over his time in UFC, he fought fights while he was tens of thousands of dollars in debt coming into the fight.
It gets so disheartening because I've seen fights that are called the fight of the year. This is just this brutal war. And they battled for 4.5 rounds until one guy's body just gave up. And then you find out, oh, that guy made $60,000 for that fight.
In one of the hearings in this lawsuit, UFC's attorney argued that if the fighters were really the product, if all that UFC were selling were the fighters, then the fighters wouldn't need UFC at all. That a fighter is not themselves the UFC product any more than an Apple engineer who makes a cool iPhone is the product that Apple is selling.
We, the fighters, make this whole thing happen. And it's been driven by Chuck Liddell, it's been driven by Randy Couture, it's been driven by Conor McGregor, it's been driven by Brock Lesnar, it's been driven by all the greats that have walked before us and that walk this path right now. We are the product.
If the fighters are not the product, then go ahead and release us from our contracts. You'll do fine without us, clearly.
It's the identity and rank and popularity of those fighters that attract the eyeballs and make the sport what it is. And if you can lock all those up and keep them from other promotions, you can dominate the sport, which is what they've admitted they've done.
William Isaacson, a lawyer for UFC, said in a statement that UFC has spent many years building a world-class organization, enhancing the brand of our athletes, and championing the sport of MMA. UFC pays its fighters more than any other MMA promoter, with average fighter compensation rising by over 600% since 2005. Our efforts have raised the global popularity of the sport and the overall revenue potential of all MMA organizations and athletes. In December of 2020, the judge announced a crucial step in this lawsuit, which is that he is going to certify it as a class action. Class certification makes this lawsuit a much more significant threat to UFC, and the judge made clear long before saying how he planned to rule that he expected whatever he did to be appealed into federal appeals court and on from there to the US Supreme Court. So we are likely in for many more months and years of wrangling over this. Kyle Kingsbury said that he doesn't think any settlement would be acceptable unless it includes a change to the restrictive contracts that UFC uses to keep fighters bound to the UFC.
My son's about to turn 6 years old, and it started when he was in the womb. We're in this thing to the end to change the sport forever. We want the same freedoms that are offered in any other major sport, and every other major sport has gone through what we're going through right now.
People tell fighters, just shut up. Look at how lucky you are. Well, no, actually, we're fighting for what we believe in. We're going to continue being fighters, and that's how we're made.
Every nation that's a coastal state has some region of the seafloor that falls within their territorial waters, and many countries, including the US, the area that's underwater exceeds the area that's above water. So huge amounts of nations' areas and regions are just really unexplored, uncharacterized. We don't really know what's there.
We know less about our seabed than we do about the surface of the Moon or Mars. Only 20% of it has been mapped. A map of the seafloor could lead to all kinds of discoveries, like new marine species and rare earth minerals like cobalt that we need for electric cars and mobile phones. The value of all the gold deposits alone on the seafloor is estimated to be around $150 trillion. A map could also help us when tragedy strikes.
Malaysia Airlines Flight 370 disappeared from radar screens.
Mapping of the ocean floor is being carried out. Problem is that the Southern Indian Ocean is just so incredibly huge.
To me, a map is a fundamental piece of understanding of who we are, where things are. Once you understand something, you start to value it more. And when you start to value something, that's when you start to really think about making it healthy and preserving it and keeping it going. A map is the first step. It's the basic understanding that you need to figure out where you are.
Oceans. They cover over 70% of the planet, but most of what lies underneath is a mystery.
The seafloor is a really fascinating landscape. We don't have a lot of data to describe the shape of it in detail, but in places where we do, there are spectacular features. There's meandering channels with all kinds of interesting topography. There are canyons, there are seamounts, mid-ocean ridges, all kinds of things that we see on land. and that are just basically hidden from us by the water.
As it stands, this is what a map of the seabed looks like. All that black, those are the parts we haven't mapped yet.
At present, most people think that the seafloor is actually mapped because you'll see a world ocean map and you can see some shape of the seafloor, but most of that is based on prediction. Roughly 80% of what you see for the world ocean floor is modeled based on measurements of the sea surface height and a computation based on gravity.
In 2017, the Nippon Foundation and the General Bathymetric Chart of the Oceans, or GEBCO, launched Seabed 2030. It's a collaborative project to collect and collate data ocean-wide and create a complete map of the seafloor by the end of the decade. To do this would take one ship around 350 years at a cost of up to $3 billion. That's why data is harvested by all kinds of vessels, from fishing boats to freighters.
Because there is so little data, it's important that vessels that are capable and willing to acquire data when they're just moving around the ocean do so. So we have a lot of data that's collected during transit. There's a lot of academic requirements to make data publicly available. There's industry data that's starting to become more and more available. There's government data. So there's a lot of different ways that this data is coming in, and it's a really messy and challenging puzzle to put together. But what's exciting is that it's a puzzle to put together.
Since Seabed 2030 launched, the area mapped has risen to 20%, and all the information collected is freely available.
The more data we have collectively and other people can access, the faster the discoveries are made, which really pushes forward our understanding at a faster rate than if you held on to that data and it was only you with that data. Things like machine learning and artificial intelligence are also going to kick in the next decade, because with all this data, they'll be able to make connections that a lot faster than perhaps we would have been able to, which then again feeds our human understanding and also gives us new ideas, new ways of thinking, of exploration.
Until the early 20th century, mapping technology was simple, usually a weight attached to a long rope known as a lead line. After the Titanic sank in 1912, explorers proposed using sound waves to find its hull in the North Atlantic. This led to sonar, the most common technique used for mapping today. Operated by the Schmidt Ocean Institute, the Falkor is an 82-meter-long research vessel, equipped with 2 multi-beam sonar systems that have helped Deborah Smith and a team of other marine technicians to map over 1 million square kilometers of the seafloor.
You know, you go from somebody with a rope with some knots to sonar acoustics that is, I call it math magic, but it is incredibly advanced mathematical technology to be able to measure the distance and time of travel of sound on a moving ship. Multi-beam mapping works by using sonars. So sonar is taking sound and a measurement of time. So you have a multi-beam sonar and it sends out a ping of sound. That sound travels through the water column, hits the seafloor and comes back to the ship, and we measure that time and we're able to calculate the distance. Each individual ping of sound has many, many beams. So it looks like a giant fan across the seafloor, and that fan is moving along the seafloor. So you have many tiny little beams going across and they're traveling along a track. You can look at that data and look at both the peaks and the valleys and the highs and the lows and sort of create a three-dimensional image of the seafloor. The accuracy of multi-beam sonar really depends on the water depth that you're in. Think of it like a flashlight beam, and if you're holding a flashlight and you're shining it on the floor, the closer you get to the floor with your flashlight, the smaller that beam is. If you have 400 of these beams all across, so think of 400 people holding a flashlight, the closer they hold that flashlight to the seafloor, the smaller your beam is, which also means the smaller that you can find information or data about. So it really depends on the depth of the seafloor in order to see how much you can define an object.
This variation in depth means that mapping resolution will range from 100 by 100 meters in shallow waters to 800 by 800 meters in the deepest parts of the ocean, which go down as far as 11,000 meters. Remotely operated vehicles, or ROVs, can then be sent down to investigate seabed features up close.
We've just crossed the 1,000-metre mark. It's 4.6 degrees C, and now we're going to drive the ROV down at a high rate towards the seafloor.
On a recent mapping expedition, scientists on the Falkor discovered a 500-metre-tall coral structure in Australia's Great Barrier Reef, the first to be discovered in over 120 years.
A place that is incredibly popular, well-visited, well-traveled, you know, we're still finding new things. You don't know until you map it. And so until you get that sort of high-resolution picture, you don't know the sand waves or the old riverbeds that used to be there or the waterfalls off the side of a volcano that used to be above the surface and now is below the surface. It's a little bit of everything. Think of, let's say, Hawaii or someplace where you see a volcano above the water. Picture that below the water.
I'm really kind of obsessed with the whole concept of scale here. Although we can create 3D models and, you know, kind of come up with these visualizations, it's not the same as that feeling of looking out over this big landscape. But I mean, I think we'll get there soon with VR and other kinds of technology, but it's really spectacular to think about, especially with the familiarity that some of us have with these features, like what it looks like. We look out at the ocean and it just looks flat, maybe with little bumps. We really don't think about all of this that's underneath, and it's really an amazing landscape that's just hidden from us.
With more than 90% of the ocean deeper than 200 meters, fleets of autonomous vehicles could make the data gathering process faster, cheaper, and safer. And new discoveries might help with exploration of all kinds.
I think the ocean can actually provide us with huge insights as we go out into space as well and look for life and other kinds of life forms. I also think in this next few years we will have a different kind of access to the ocean because of virtual reality and augmented reality, and so that will allow us to sit in our living rooms and really experience what's underwater in a different way and see this different alien planet.
Since the dawn of man, meat has been on the menu.
Then a pure beef hamburger. Over a pound of meat. We have the meat.
And even with growing trends of vegetarian diets and plant-based substitutes, around 89% of the world population consider themselves omnivores.
We have come a long way from our hunter and gatherer roots. We have managed to establish a whole industry designed to feed almost 7.7 billion people. We've maximized production and we managed to reduce hunger over the past couple of decades.
And although we've become exceedingly efficient at putting meat on the table, raising livestock animals by the billions comes with its own set of consequences.
If animal agriculture continues to expand the way it has, there is a risk that we won't be able to stop climate change.
But with rapid advances in technology, we might soon see a food industry that leaves all those problems behind.
I'm about to be one of the world's first commercial customers for lab-grown meat, cultured meat, to eat just as a company, and I'm very, very excited. Here is the chicken. Looks pretty crispy outside. That's really good. I mean, look, it's really tasty.
Here at 1880 in Singapore, cultured chicken is being served under a regulatory approval granted by the Singaporean government. It's the very first time a cultured meat product, meat made from animal cells grown in a lab, has been approved for commercial sale. Eat Just, the company behind these chicken nugget-style dishes, is based out of San Francisco and got their start in 2011 developing plant-based egg substitutes like mung bean scrambled eggs and mayonnaise. But it wasn't until 2017 that they announced they were shifting focus to a cultured meat product.
In order to feed the world that we live in, a lot of animal protein, we need to take a third today, and it'll be more tomorrow, of our world and make it dedicated to feeding chickens and cows. We go to areas that are filled with biodiverse rainforests, taking a bulldozer to them and planting soy and corn to feed the chickens that we eat. Climate change is accelerated by the kind of animal production that we engage in. When we bring animals in tiny little spaces, it accelerates the probability that more zoonotic diseases are going to impact our families. And from a morality perspective, why do we need to cause any harm to any other living thing to have dinner that tastes good? It does not have to be that way. And those things underlie the force of this idea.
The meat alternatives that have made it to the market thus far have been plant-based. Imitation beef and pork made from ingredients like pea protein and coconut oil by companies like Beyond Meat and Impossible Foods. That's a very different proposition from cultured meat, which is made from actual animal cells.
I'm a huge fan of any company, of any person trying to make a product that's improving the food system, including all the plant-based proteins. Maybe in some future menu, you'll have this kind of cultivated chicken, and you'll also have a plant-based version. That's fine. But I guess you have to ask yourself, in our lifetime, is that diner likely to also remove the conventional option on the menu too? We do think we need a more permanent solution. We do think we sort of need, if you will, an end game to this problem, and we just think this is more likely to be the path to achieve that.
So animal cell technology has been around for several decades for applications such as development of vaccines and other biotherapeutics. The first known prototype of cultured meat was done by Mark Post earlier in 2011. And essentially, he was developing a beef patty. It was a very expensive prototype, if I'm not mistaken, above 250,000 euros at the time to produce just one beef patty. But it was more of a proof of concept to really demonstrate that this technology is possible and that it can be done. The way that we grow and produce cultured chicken is essentially we isolate chicken cells from chickens without having to kill them. So from a small biopsy, for instance, we immerse these cells in a liquid broth that contains the nutrients that the cells need to survive and be healthy and to grow. We really need these cells to multiply to reach the numbers that are sufficient to make a meat product. We're looking into the cells that are really important for meat. So we think about muscle cells, fat cells. By that isolation, we are able to form those muscle tissues in culture. The culture happens inside of a fermentation tank, what we call the bioreactor, which is essentially providing the same conditions as the animal body. Warm temperatures, some sort of mechanical stimulation, so that the cells are exposed to very similar conditions that they had inside of the animal. After the cells proliferate and reach a certain density, the final step is essentially to separate those cells from the liquid broth that they are in. We just make sure that the product meets our quality and safety standards, and then those cells are ready for consumption. Milk, cheese, yogurt, a lot of those derive from fermentations. The only difference is that they're starting from a different cell type. In this case, we're just using the animal cells as the initial and beginning of the product.
Eat Just has developed chicken nuggets so far, with far more textured chicken breasts planned for the future. But another cell-based meat startup, Memphis Meats, has already started working on culturing other animal cells as well.
We've done beef, we've done duck, we've done chicken, and these are things that are favorites in various parts of the world. For instance, people in America love beef and chicken. People in China love duck. So we wanted to show that we at Memphis Meats can produce meats that we as a global population love to eat. There's a lot of similarity in how we grow the meats from various animals or fish, but they're also different because of the nutrients they need and how they actually come together to form the final product of meat. And I think it's very similar to how we also grow various animals. There's similarities in the feed that we give cows and pigs and chickens, but there's also differences how we cultivate, and it's very similar for us as well. So we've been working with the FDA and the USDA for the last 3 years and really developing the guidelines on how this food should be regulated when we come to the market. As soon as we get regulatory approval in the United States, people will be able to go to the supermarket and buy it and enjoy it. They'll be able to go to a restaurant near them and order meat directly from animal cells.
But it's not just getting the meat right. Once approved, the gates open to a very high potential demand, and scaling becomes the next big hurdle.
Before, we could only make chicken for myself, my friends, my girlfriend, my family, my colleagues. Now we actually have the ability to make chicken for millions of people. So that allows us to invest and to allow the economies of scale to drop the price. The second is we need to reduce the cost of the nutrients that these cells are consuming. So I think chicken feed raises or drops the price of chicken. The nutrients we feed ourselves does the same thing, so we need to drive that down. The cell density is another technical element. We need to continue to increase that. And hammering on those things over the course of the next 5, 10, 15 years will put us in a place where we're significantly below the cost of this animal protein, and that will be one of the main inflection points that will lead to a new way of eating meat.
So here's a close-up of a half-eaten crispy chicken bite. You know what? What I'm really thinking is, I'm eating chicken. I like chicken. No, the normal chickens I eat, I don't know where they came from. And so I don't know why I should be very stressed where this came from either.
The meat market is worth more than $1 trillion annually, and there are over 60 startups in the cultured meat field.
Cultured meat has attracted several prominent investors, including Sergey Brin, Richard Branson, and Bill Gates. What is also interesting is that even meat giants such as Cargill and Tyson have invested in space. It's this disruptive potential of the market, as well as the promise to greatly reduce the climate impact of meat production that has attracted investors.
It remains to be seen who will get regulatory approval in which countries, and whether consumers will like lab-grown meat enough to make the switch. And while there's no evidence that lab-grown meat is any less healthy than traditional meat, there's an ongoing debate over how healthy eating meat is in general. But if these products are a success, they could be the beginning of a more humane, less destructive meat industry.
The food and ag industry is the most innovative industry in the world. It's always figured out how to feed a growing population, and we've never failed doing so. And it's been very clear to us that we are part of that, and we're going to figure out how to feed the next 3 billion people joining us, and I just see an evolution.
We can do this a bit differently. We can do this in a way that is consistent with the kind of people that we want to be, the kind of planet that we all want to live in. We can build a food system that reflects really the best characteristics of who we are, and that makes me really hopeful.
Impossible Foods might be the world's most ambitious company. Just listen to founder and CEO Pat Brown.
People wonder how big the plant-based meat industry is going to be. It will be the meat industry in 20 years. We're going to look back and basically say, wow, remember back in the day when we used to use animals to make meat?
Yes, Impossible's stated goal really is to replace the use of animals as a food production technology globally by 2035. That would mean supplanting a $1.2 trillion industry, not to mention a source of sustenance as old as time. To be fair, the company has got a lot of people talking about its products.
So there's this thing called the Impossible Burger. What's called artificial meat. The realest, fakest burger in the world.
Not bad.
But before Impossible Foods can take over the world, it's going to have to overcome strong competitors, penetrate tough new markets, and generally transform its product from a conversation piece into a ubiquitous staple food. With the coronavirus turning the world of food upside down, this could be the moment when Impossible's newfangled meat goes mainstream. Impossible Foods was founded in 2011 when Pat Brown, a longtime vegan, was nearing the end of an accomplished career in biochemistry.
I've been a scientist my whole life and just came to this realization that by far the most important scientific question in the world is, what makes meat delicious?
Pat Brown, some would call a zealot for his mission. He really doesn't hold back when it comes to talking about wanting to completely replace animal agriculture.
Producing meat from animals is the most destructive technology on Earth, and if we're going to avert catastrophic climate change, we have to find a better way to produce meat.
You've probably heard about the dangers of cow flatulence. Their digestive systems produce large quantities of the powerful greenhouse gas, methane. In fact, it's estimated that livestock farming is responsible for nearly 15% of all greenhouse gas emissions. Impossible claims it takes 89% less GHGs, 87% less water, and 96% less land to produce its burger. The key, of course, would be to get people to actually eat the thing, which is where the company's secret ingredient comes in. Heme, a genetically engineered substance with a bloody iron-rich taste like red meat.
So heme is a very controversial part of the Impossible Burger. It's also what makes the Impossible Burger what it is. There are a lot of consumer groups and anti-GMO groups that oppose the Impossible Burger because of the heme. The studies on its safety are pretty short-term, but FDA has approved it and the company says it's completely safe, and there isn't any evidence that it isn't.
Critics have also challenged the company's claim to health advantages over traditional meat, pointing out that while the Impossible Burger has less fat, sodium, and calories than its beefy cousin, it's also more highly processed. But let's be real, we're talking about mimicking hamburgers here, not kale salads.
These burgers are definitely better for the environment, so that's a plus, but they are not necessarily better for your health.
After years in the lab, Pat and his colleagues were confident they had a product even Ron Swanson could love, and the Impossible Burger made its debut in 2016.
Their burger began its life in the public when it was sold at David Shank's Momofuku. And they went from sort of higher-end fine dining restaurants into higher-end burger restaurants like Bear Burger and Umami Burger. And then suddenly they started popping up everywhere.
This tastes like a burger. It tastes like meat.
This is all made from plants.
All made from
This
plants.
tastes like beef.
Doesn't that just look like real meat?
So meat-like.
They always say it's just like a burger. It tastes like yuckers.
Beef farmers of the world, relax.
No, it doesn't taste like a burger.
Opinions differed on the Impossible Burger's relative meatiness, but the debate itself was fantastic free advertising, helping to propel Impossible into major chains like White Castle, and then, in the summer of 2019, into more than 7,000 Burger Kings across the US. To date, the company has raised over $1 billion, and a funding round in March valued the company at around $4 billion. But fake meat is a happening space these days, and Impossible faces some daunting competition.
Time now for the stock of the hour, and that is Beyond Meat. Shares of the faux meat or plant-based protein company are soaring today.
Beyond Meat is also making a very meaty burger from plants. They're very non-GMO. They stress that all the time to differentiate themselves from Impossible.
It would be much easier to genetically modify plant material to make it take on the texture and appearance and aroma of animal protein.
Right.
But we won't do that.
Beyond Meat had one of the biggest IPOs of the year in 2019, so Impossible, which is still privately held, has some catching up to do. But you won't hear Pat Brown knocking his biggest competitor.
I wish them nothing but success. They have the same mission we have. The only rival we care about is the incumbent animal-based industry.
Rivals or not, Impossible and Beyond certainly agree on one thing. The true prize isn't the American market, it's China. 27% of the world's meat is consumed in China, compared to just 9% in the US.
The Chinese population eats a ton of meat. They're a huge market. China's a really interesting case because they have long had vegetarian cuisine as part of their culinary culture, and whether they are looking for meat replacements is still an open question. What we found in our reporting is that some consumers are excited about them. It's just, we don't know if it's going to be enough.
To improve its prospects, Impossible is developing a plant-based replacement for pork.
Globally, pork is the most widely consumed meat. It's almost 40% of all the meat consumed globally. #1 in Europe, #1 in China. So if we're going to achieve our mission, pork is, right up there.
No word yet on when Impossible pork will be available.
This morning, growing concerns about the nation's food supply.
From butchers to national supermarkets, supply is now limited and prices rising.
The impact of the coronavirus on the price and availability of meat has given a boost to companies like Impossible Foods. Over the 4 weeks ending April 19th, sales of plant-based meat increased. But Impossible has acknowledged some negative effects from the pandemic as well.
This being a product that has primarily been served in restaurants, they took a pretty big hit with all the food service shutdowns, although the company doesn't want to say, how much of a hit. They have, however, announced some new retail rollouts. Recently, they announced that they're going to be rolling out with Kroger supermarkets, and that's big. That's great for them. The question of whether this is like a long-term sea change for these companies, I don't know. Just have to wait and see.
It's safe to say Impossible stands a slim chance of achieving its goal of replacing the entire meat industry. But it's early days for the science of plant-based meat, and it's not impossible that these products could one day contribute to a greener, more humane future. In the meantime, as the technology improves, we get to look forward to many more years of this.
This is meat. No, this is Impossible.
Yeah, that's what I thought.
This is the meat burger. I like it better.
It's not even close to a veggie burger or a tofu burger or anything like that. It's very, very much.
Gwadar is a strategically important point on the map of Pakistan. It sits very close to Iran, actually, on the very southern coast. It's about a 10-hour drive west of Karachi, but it's only about an hour drive to Iran. The area is extremely poor. It's very arid. It doesn't have enough water. Electricity has been very spotty. One of the most surprising things about visiting Gwadar is the high degree of security that is absolutely everywhere. There are armed guards that are required to escort foreign visitors everywhere you go because it is a contested region, because there have been militant attacks in the past.
Despite all this, Gwadar is a key part of the China-Pakistan Economic Corridor, also known as CPEC, the crown jewel of President Xi Jinping's Belt and Road Initiative.
We will leave no stone unturned in ensuring that CPEC and all the projects under its umbrella are materialized in time and in full.
So far, just 1/3 of all CPEC projects have been completed. In Gwadar, none of them have been, and the promised improvements for local people like job creation and better infrastructure have not materialized. So what has China got to gain from developing this seemingly obscure city on the Pakistani coast?
We have seen this movie before. An outside power comes into Pakistan. It spends heavily on big infrastructure projects. China's not the first to do it. Right after Pakistan became independent in the late 1940s, early 50s, the U.S. was sending advisors into Pakistan to help plan its economy. The U.S. was doing infrastructure projects there too.
Those early projects helped the US gain Pakistan as an ally against the Soviet Union during the Cold War. The US has provided about $80 billion in aid to Pakistan since its independence, but overall the result is disappointing. One of the recent attempts was in the late 2000s as part of the US effort to combat terrorism in Afghanistan.
The number one item on that aid package was to build these high visibility infrastructure projects. So there are literally projects that the United States tried to do or Pakistan proposed to the United States in the 2000s during that period that have become Belt and Road projects.
China is stepping into a gap which has been left by retreating ambition from the US.
一带一路建设美好的未来，为各国发展繁荣干杯。
The Belt and Road Initiative is China's President Xi Jinping's signature foreign policy initiative. Launched in 2013, it comprises an overland belt stretching through China, Central Asia into Europe, and a maritime road stretching around Southeast Asia through the Indian Ocean and up past East Africa. So a benign way of characterizing China's Belt and Road Initiative would be infrastructure for influence.
So when Xi Jinping announced the Belt and Road Initiative, shortly afterwards China designated Pakistan as its showcase flagship project. So the China-Pakistan Economic Corridor was going to be the biggest and most important showcase for the success of the Belt and Road. Pakistan is in great need of infrastructure development. They wanted to create a railway, a highway, roads, all kinds of economic development that is intended to help Pakistan. And it's meant to provide jobs, 2.3 million jobs for Pakistanis. It's meant to provide a 2.5% boost to GDP growth.
And China would gain economically as well. CPEC was intended to reduce oil and gas routes from the Middle East by thousands of miles, a way to cut overland into Western China instead of going around Southeast Asia by ship. Projects in Pakistan also provide Chinese state-owned companies with an additional market. Chinese workers are brought to Pakistan to build infrastructure and then take wages home. CPEC is also strategically significant for China and Pakistan. China wants to strengthen this relationship to counter their shared rival India.
CPEC is both an instrument of Chinese power as well as a test of Chinese power. If it succeeds, China will be demonstrating that it's able to do what great powers have not been able to do in Pakistan, including the United States.
Which is why Gwadar is so important. It's in Pakistan's Balochistan province, an area with serious electricity and water shortages.
Balochistan province is actually populated by people who are of Baloch origin. They're a different ethnicity, they speak a different language from the majority in power in Islamabad. And they feel, as the poorest province in Pakistan, they have not sufficiently benefited from some of the economic achievements that the rest of Pakistan has had. That area is quite contested by the Balochistan Liberation Army, the people who feel that even Pakistani people have encroached into their territory. So quite a number of people are still staging attacks, and they attacked the biggest international hotel in Gwadar, shot up the lobby and killed, I think, 5 people.
But this unsettled city is where the China-Pakistan Economic Corridor is supposed to lead to. Authorities plan to develop Gwadar into an international port city.
Gwadar port has an interesting history and an interesting location too. It's located in Balochistan. It's about 120 kilometers from Iran. Pakistan purchased this territory from Oman, I think in the 1950s. And so for a long time, Pakistan has had on its agenda trying to develop this area. Since the 70s, it's wanted to build a port in Gwadar. Actually approached the United States in the 1970s and tried to convince the Nixon administration to pay for a port. Even offered naval access if the United States was willing to pay for that.
The US rejected Pakistan's offer, concerned that the port would not be commercially viable and would cause geopolitical tension. But in the early 2000s, a Chinese company was awarded the contract to build the port, and they completed phase 1 of construction in 2006. The port was then managed by a Singaporean government entity. In 2013, a Chinese port operator took over from the Singaporeans. In 2015, China announced that it will expand the port as part of the CPEC initiative, but 5 years later, little has happened.
When you look out at the port, you can see it has only 3 berths, and all of them were empty. And the only ship that was in the port at the time was a Pakistan naval frigate. And so it indicated to me that the port is not particularly operational for commercial purposes, and a number of analysts have talked about the strategic importance in a military sense if eventually China were able to use the port of Gwadar as a military base.
You know, no one would be surprised if China did use it in that way. I don't think in the short term, like it is set up in Djibouti, where it has a permanent base. I think it's more likely to use it as almost like a sort of forward-based resupply option, something it can use when it wants to.
Other projects, like building Pakistan's largest airport in Gwadar and 2 special economic zones, have been delayed. A 19-kilometer highway linking the port with the Makran Coastal Highway in Balochistan is under construction too.
Most of the people who live there and work there already are fishermen. They rely on access to the sea. The way that the express highway from the port was originally proposed would have cut off their sea access, and so that was a real point of contention with the community. There have been some proposals to allow them an underpass. It's still a little bit unclear how that is finally going to be resolved.
Even if those projects are eventually built, there are serious questions about who will work there.
There's a problem with manpower, of course, in Guadalajara. It's a very small city, and so one proposal has been, well, we'll just ship Chinese workers in from China and build lots of fancy housing for them.
The first Chinese-built community in Pakistan, a $500 million development spanning over 10 million square feet, with over 60% open spaces.
That kind of proposal is what makes a lot of the Pakistani local people quite upset.
A Guadalajara-based journalist expressed concerns to Bloomberg over projects like this. The journalist spoke anonymously for fear of persecution from the Pakistan government.
These projects are creating jobs, but they're not really creating jobs for the local people of Guadalajara. They're not against economic prosperity, but they're against the development that leaves them behind.
Pakistan doesn't have the money to build these projects. It's gone to the IMF for its 13th bailout since the 1980s. By engaging in CPEC projects, the government of Pakistan has incurred more debts from China, not only posing challenges for Pakistan, but possibly the international community if Pakistan eventually defaults on its debts. But CPEC is still set to go on. Even if most current projects haven't been completed, the two countries have recently signed new projects worth $11 billion. Pakistan's Prime Minister said the country's economic future is linked with China.
It's hard to imagine how the China-Pakistan economic corridor is going to be the game changer that the Pakistan government would like it to be. We're not seeing economic growth or benefit from the projects that were set out and we're supposed to have seen by now. We're not seeing the job creation.
Project delays, accumulating debts, commercial viability. These problems of CPEC are also typical of Belt and Road projects around the world.
For China, though, it's never the narrow accounting perspective that matters. It's the bigger strategic benefits. As China's dollars continue to flow, as China's concrete continues to pour, China's influence continues to increase.
There was some degree of runaway expectations. I think there was also some degree that they weren't extremely forthcoming with the state of the game.
The Cyberpunk 2077 story is very much kind of a story of everything that can and will go wrong in game development.
What is this bug? Jackie's AI flipped out. He wasn't there before.
Where's my gun?
Keep her steady.
I can't shoot.
The release of Cyberpunk 2077 in December of 2020 will go down as one of the most disastrous game launches in history, and it instantly rewrote the narrative of its celebrated developer, CD Projekt Red.
Larger studios with bigger budgets weren't able to create the same quality of open-world game.
The inside story of the making of Cyberpunk depicts a process marred by unchecked ambition, unrealistic timelines, and a focus on marketing at the expense of development.
When CD Projekt stock was at its high, it was the largest stock in the Polish stock market.
Cyberpunk was supposed to be the biggest game of 2020. This was a game that was starring Keanu Reeves. This was a game that was from the makers of The Witcher 3. This was supposed to be the big tentpole release of last year. And for it to become such a disaster for so many people, I think will have pretty far-reaching consequences.
CD Projekt's origins are somewhat unique in the games industry. In the West and Japan, the late 80s and 90s were dominated by games for the home console market, and characters like Mario and Sonic the Hedgehog were becoming household names. The same was not true in a post-Soviet and economically depressed Poland. Most gaming was done on PCs, and most games were copied and sold in small markets around the country.
You could go to the market down the street in Warsaw and buy and sell CDs. And these two guys, Marcin Nowinski and Michał Kaczynski, decided they were going to start selling CDs, and they wound up striking a deal with the people who made a game called Baldur's Gate, which is kind of like the seminal role-playing game in the late 90s.
It was never a business, it was kind of lifestyle, so we were actually pretty bad with counting money.
So you can kind of think of it almost like Nike, where Phil Knight was selling shoes out of the trunk of his car. You can kind of think about it the same way. It was, just selling physical goods and then evolving that into a much broader enterprise.
CD Projekt, named for selling CDs, would move on from just reselling games to localizing Western and Japanese-made games into the Polish language. But it wasn't until 2002 that the company would make its own game, The Witcher.
The Witcher is a huge series, huge fantasy series in Poland, and so it was a pretty big deal that these guys got the rights to make the video games.
The Witcher book series is a source of national pride in Poland, and as CD Projekt released The Witcher 2, the video game series would become an important economic symbol for Poland as well.
CD Projekt Red had become this behemoth of an institution in Poland, and they were really big in the Polish technology scene because they were getting more worldwide attention than most Polish companies do, and making a lot of money. And in 2011, when Barack Obama came to visit Poland, the Prime Minister actually gave him a copy of The Witcher 2.
I confess I'm not very good at video games, but I've been told that it is a great example of Poland's place in the new global economy.
But it would be the launch of The Witcher 3 in 2015 that would elevate CD Projekt Red from representing the best of Poland to representing the best of the games industry.
I mean, really, the thing people look for first and foremost, I think, is that the game is just good, and Witcher 3 was just a phenomenal game. There's a level of just storytelling, an emphasis on making every side quest count, on top of the atmosphere, the dialogue, the character interactions, the different ways stories can end. They nail that.
Other open-world games felt empty and forced, and the developers of them gave excuses as to why there couldn't be more rich story or interactions. And The Witcher 3 blew them out of the water. CD Projekt Red was beloved. They were seen as a studio that was willing to make what the player wanted and to truly put in the love and effort required to make a high-quality game that really connects with the people playing with it.
And the winner for Game of the Year 2015 is The Witcher 3.
The Witcher 3 would go on to win over 250 Game of the Year awards, but along with being a critical success, for CD Projekt, it was also a financial success. Estimates put the sales of Witcher 3 at around 28 million copies in 2019. A huge step up considering by 2014, The Witcher and The Witcher 2 had only combined to sell 8 million copies. And with 2 large expansions for The Witcher 3, CD Projekt also helped separate themselves from other AAA publishers at the time.
And the game award goes to, oh man, I have to pay a microtransaction to unlock? That's so stupid that this has to, hold on, I got this, guys, here we go.
Other games, and the most notorious, one to do this was EA's Star Wars Battlefront 2. They got really aggressive on microtransactions in a game that already cost at least $60. You could have paid more if you bought the premium editions. But not only was it that they were being very aggressive and trying to get you to spend money, but you could actually get items that helped you win. Well, gamers kind of draw the line in the sand there, and they don't like that.
CD Projekt had done this phenomenal job of marketing themselves as a gamer-friendly company.
We've said this a million times, and I'll say it again. We're gamers, first of all, and we all like to be treated fairly. So it only makes sense that as developers, we apply the same principle to everything we do here at CD Projekt Red. So giving everyone a bunch of free DLC was an absolutely no-brainer.
They said, we're not going to sell you DLC that's like horse armor packs and other nonsense. We're going to just give you free stuff, and then we're going to sell big expansions as part of The Witcher 3.
And not only were they really good, they were offered at a fair price.
And this is a company that was seen as just like a company that really cared about quality and cared about its customers and would not do anything to kind of screw fans over the way that fans see that EA and Activision and all the other big publishers do.
With a critically and financially successful game, as well as the goodwill from the gaming audience, all the focus would shift to CD Projekt's next release, Cyberpunk 2077.
It's actually funny, they first announced it through like a press release, and then they showed off a trailer at the beginning of 2013 that was like the CGI trailer of like a woman, and it was all sorts of cool cyberpunk stuff, flying cars, lots of stuff, but it wasn't really until after The Witcher 3 that Cyberpunk began really like building up this feverish level of hype.
CD Projekt Red, though, wouldn't put out another trailer for Cyberpunk until 2018 at the E3 trade show.
And they showed off it was like a 2-minute trailer of Cyberpunk, looked pretty rad. And then they showed behind the scenes for E3 attendees, for press, and anyone else who could score an appointment in there. They showed this 45-minute demo, and it blew people away.
Welcome to the gameplay demo walkthrough of CD Projekt Red's upcoming title, Cyberpunk 2077. The gameplay you're about to see is from a work-in-progress version of the game. Everything you see is potentially subject to change.
Holy this, if they can live up to what they showed me, it's game over.
It all looked incredibly impressive. They had enough action, enough narrative beats with just the right amount of tension. They touted how each of these NPCs, there are thousands of them, each one with their own daily routines and everything.
We've greatly enhanced our crowd and community system to create the most believable city in any open-world game to date.
So people were certainly blown away by this demo at won E3 Awards, and just people left the theater just in awe. What they didn't know, of course, is that the demo was completely fake.
Fake demos are common at E3. Studios put together builds of games to show off what they intend the game to be like, rather than the actual state of the game. What was unique about this demo was that it was impressively long.
It kind of plays into this idea that CD Projekt is very much a marketing-driven company, and so demos were really, really important to them. So it was really important that they make this demo blow people away, which it did. But that might have come at the cost of like some time they could have been spending on the game.
A year later, at E3 2019, fans will get another big surprise.
Whoa! No way! Oh, what?
Please welcome Elon.
The feeling of being there, of walking the streets of the future, is really going to be breathtaking. You're breathtaking! You're breathtaking!
The Cyberpunk trailers showed gorgeous cities, beautiful lighting, really cutting-edge technology when it comes to the rendering of the game itself. People were very excited to be immersed in this gorgeous cyberpunk world. They saw over 8 million pre-orders, which is a ridiculously large amount for any title to sell, let alone pre-sell.
And you saw the stock price start to go up and up and up and to the right, you know, pretty much in a straight line. If you just look at like the Polish stock market, like the WIG index, when CD Projekt stock was at its high, it was the largest stock in the index.
And that was around the time that they announced that the game would be coming in April of 2020. Behind the scenes, people were pretty shocked that they were saying April. I don't think a single person who worked on that game actually thought they had a chance of coming out in April of 2020. So in April of 2019, I published an article for Kotaku about the making of a game called Anthem, which is a game from Bioware that was disastrous in many ways, and the article kind of ran through why that was. And afterwards, I started hearing from other developers who had stories to share that they said sounded a whole lot like Anthem. The deadline is unrealistic, the direction keeps changing, things are floundering, we're going through a lot of problems. This sounds exactly like what you wrote about Anthem. Around that same time, perhaps coincidentally, I heard from the CEO of CD Projekt Red who wanted to reach out to me specifically to talk about crunch.
CD Projekt Red had a reputation for crunch, especially during the development of Witcher 3.
Their management wanted them to have a reputation for treating workers well and not forcing them to go through crunch. So Mark Chinovinsky, who's the co-founder and co-CEO of CD Projekt Red, came to me and said, hey, I want to make a vow right now that we're not going to force anybody to crunch, that people will not have to work mandatory overtime on this project.
Over the course of reporting, Bloomberg has conducted interviews with more than 20 current and former CD Projekt staff, most of whom requested anonymity so as not to risk their careers. CD Projekt declined to comment on the process or provide interviews for the story. The company would end up delaying the game 3 different times, first pushing from an April 2020 release to September, then November, and once again to December 2020. In order to meet the deadline, the studio would scale down the size of Cyberpunk's main city, as well as canceling some features. And while those measures helped, developers still said they were under significant crunch, including one former audio programmer who claimed to work up to 13 hours a day, 5 days a week, and stating he had seen friends who had lost their families over this.
This was not a big secret in the office that the game was not going to be ready. But a similar sort of thing happened with The Witcher 3, and a similar sort of thing happens with a lot of games where they don't seem ready until suddenly everything just clicks. Some of the best games ever made, were created through this process. I don't know that it's the most efficient or the wisest way to make video games, but it's what a lot of people do. I think that management there has genuinely tried to change it, or at least said they wanted to change it, but it has proven very difficult to change that when you make games in this one specific way.
Game studios, some of them see crunch as part of their core culture, that all of their games that they've made under crunch have been successful, so it must be a core element to the magic recipe for creating good games. And that's really not the case. We've run studies and seen that at 8 weeks of working 60 hours plus, the output of a professional is the same as if they were working 40 hours a week. So chronic overwork degrades how effective someone is to the point where then it becomes negative, and overworking them is just getting you less and less productivity.
And so these guys, the people at CD Projekt, having made The Witcher 3, were kind of riding on that high, you could call it arrogance or confidence or whatever you want to call it, of having made The Witcher 3. And I think that having a certain level of confidence can certainly be a good thing, but in this case it could also be dangerous because it kind of blinded them to the reality, which was that this game wasn't going to coalesce.
Sony Pictures Entertainment is reeling from what may be the biggest and most devastating computer hacking in Hollywood's history.
Hackers attacked in waves, first crippling Sony's internal systems, then leaking 5 Sony movies online.
Today, the U.S. government pointed the finger of blame directly at North Korea for the devastating cyber attack against Sony Pictures.
Sony pulling the plug on the interview, saying it will not show the controversial comedy about an assassination attempt on North Korea's leader.
The Sony Pictures hacking was taken very seriously because it was an attack on the free world. What we had been building in terms of our civilization and our freedom and our ability to exchange information freely had been disrupted by a country that we knew very little about.
North Korea has reportedly made attempts to steal COVID-19 vaccine technology by hacking pharmaceutical giant Pfizer.
The Justice Department has charged 3 North Korean hackers over a wide-ranging scheme that included the attempt theft of billions of dollars from multiple companies.
Despite so many attacks blamed on North Korea, there was not much known about the people behind the hacking attacks. And my aim was to reveal who these people are, what they're like, what their operations are like, and on what their dreams and fears were. My name is Sam Kim. I'm a reporter for Bloomberg News, and I wrote a story for Business Week about North Korean hackers. My story is about people who were sent from North Korea to countries like China to hack for the regime, spy on enemies, and make money. North Korea's cyber abilities began about in the 1970s, with a lot of students going to countries like Russia, China, and even East Germany to learn coding. It was aimed at improving the productivity of factories at home. But in some time in the 1980s and 1990s, the current leader, Kim Jong-un's father, Kim Jong-il, thought that it would be a good idea to develop a team, an army of people who could hack for North Korea's military. So they began this team of basically hackers who would spy for the North Korean regime and also go out there and make hard currency for the regime. I think Kim Jong-un takes the hacking ability more seriously than his father. He also enjoys a bit of tech savviness as well. You know, he's often shown traveling on his airplane where on the desk there's a Mac computer. He understands the importance of computers. He understands the importance of employing technology to improve productivity of his economy. North Korea is an isolated country with its economy pretty much dilapidated nowadays. It's been under increasing pressure and sanctions from the US and the international community, basically. It does not have the resources and money to build the kind of conventional weapons that other countries are able to build. So what happens